Yo, I'm gonna tell y'all something. Good morning. I'm gonna start with that. Good morning. How you doing? I hope everything is well. I hope everybody around you is doing well. Good morning. It's good to see everybody. Things are just going off. So I want y'all to know something. I was a little late this morning. I told you guys yesterday I had a few things to do, and I'm telling y'all right now. Can I get some help with the camera? Like, I don't know why this thing moves and freezes. So this is why I haven't had it on. I've been sitting here all morning messing with it, and it just is what it is. You know, here's my guess. Here's my guess, guys. I think the reason it freezes is because when I move, I think it does something to the camera, and well, I should not have any open positions. What the? Okay, sorry. I seen something here, and anyway, cha-ching. Okay, so this was the level we dropped. Okay, I got a couple different things here. So if I could get some help, if anybody has what's up, Ray? Good morning. If anybody has any suggestions with my camera, I would love the help. It keeps freezing on me. So that's that, guys. All right, so you guys can see me. Hello, things changed. I'm still the same. You know, everything is still the same. But good morning. I hope everybody's doing well. I just got lost track there because I just. Oh, Siri suggestions. Why is Siri suggesting me that? I guess Siri is saying, "Hey, bro, it's 9:30. You're not logged in. What are you doing? It's not 9 o'clock. Usually you're logged into your account by, 7:30, 8 o'clock." It's kind of funny. I'm like, I should not have any open positions. So what's up, guys? Good morning. Welcome to the Ivy League live stream. I'm Justin. If you have any ideas why my camera's freezing, let me know in the chat below. I do appreciate it. Any help that you guys could help me with. That's why I haven't had it on. Secondly, I think I'm just going to call them and get a new camera. I think it's the camera, guys. I do. I think it's the camera. It shuts itself off for no reason when I move. Like, I feel like it goes in and out of frame or something, and then it just shuts itself off. So, yeah, that's that. Let's get into it. So I told you guys yesterday I was going to be a little late, and that's okay. You know, sometimes life on life terms, right? That's what they say, right? Life on life terms. So, congratulations. So, is there anybody here that's with us right now? Did you guys buy Upstart with us? Did you guys buy Upstart last quarter? I told you guys this was my number one. This was my number one stock. I posted it yesterday. They reported. I said, hop on the train. Let's ride. Guess what? Upstart. You're up over 100% in one quarter. Congratulations. Congratulations. After this earnings report, it really caught my eye, and I told you guys I was buying it. I didn't recommend you guys to buy it, but I said, hey, if you guys asked me, what stock do you like the most out there? I would have to say Upstart. Upstart was my stock, was one of my favorite stocks going into, the end of the year. Let's get into it. Let's get to trading, guys. Let's get to work. So I had a lot going on right there. Again, I do apologize. I'm not even fucking with this camera, guys. I've been sitting here for an hour. I've been sitting here for over an hour. If you don't know, follow me on Twitter at Ivy League Trades. Let's go see what we got trending this morning. Again, let me know how you're doing. I hope everybody's doing well. I hope you guys performed as you wanted to this week. If you didn't, go back and see what you did wrong. Which I'm going to have a video that I'm going to put out tomorrow. Or we'll do it on live or something. But so here's the thing. So like yesterday's NVDA trade. Yesterday's NVIDIA trade was an issue. And I'm going to show you guys why. It's a very easy fix. Very easy fix. Alright, very easy fix. It was a different trade. It was a different trade. Yesterday I tried to take the pullback on NVIDIA yesterday, but we might get it today. And there it is. There's the break and retest. I just missed it already, I think. Let's pull up. I need the markets. Hold on, guys. I'm just doing everything all at once right now. So you're coming into the support level at 146 here, which was Wednesday's close. So I got short. Today is Friday, correct? Yes. I got short Wednesday, and that was because this pullback worked. Why? Because of the resistance zone that was already there previously. Okay? Previously. So trying to do it again when we are above this level, what am I doing? Like, what am I doing? Sure, were we looking for a pullback to prior day's close? Yes. But there is no resistance zone up here yet. Why did I put on that trade? That was an easy, identifiable mistake that I will not make again. I'm not going to make that mistake again. The stock breaks to breaks through the resistance into an all-time high with volume. Shit. The first time you hit it, sure, you're going to get that rejection more than likely. All right? More than likely. But if you're doing it after it broke, right? So there's the double top, and then it finally broke out. You know, I was looking for a little pullback down into prior day's high and stuff, but it didn't have to come that day. It was just too easy. It was a mistake. There was no resistance there for me to get short. That's the lesson. Go back and analyze your trades and where you went wrong, and I think you'll start finding different things on how to fix your trading. All right. Again, massive resistance zone right here. All right, from previous highs, and it worked out. All right, look at the volume today on this 15-minute chart on NVIDIA. I'm going to go to like DJT and a few other names. I just got to fix my charts. Usually I have all this stuff done and ready when I come in the morning, but I had a few different things to do today. All right, so I'm watching this whole area. All right, I'm watching this area right here. I want to see if we can get pullbacks into 144. All right, on NVIDIA. The volume just stopped out of nowhere. The SPY's making a new high. All right, SPY's making a new high. So maybe later on. All right, let's go look at stocks. We'll look at DJT. We'll look at a few other names. I want to make some money today. I'm going to get right to it. Even though I feel like the day is done. Congratulations on Upstart again. If you were a buyer with us, monster move, guys. You're up over 100. You're up over 110, 120% just in one quarter. I think this thing's got room to go too. And more than likely we'll be buying more. Another trade idea that I have here on TLT, and really quickly, let me just say, if you guys have any questions or anything, post them in the chat. If you have stocks you guys want to look at, or that you guys want to cover or trade, or if you want me to give you my thoughts on it, post it in the chat below. And secondly, we are doing a workshop. I'm doing a workshop. It's only $25. I'm doing it to raise some money for the stream, and it's going to go over everything from understanding the math for your risk management, number one, entries and exits, the psychology, buy trigger, sell. It's going to cover a broad basis of trading and a bit of a one-on-one with, you know, everyone that attends to fix where they think that they may go wrong. Like, what do you think you're doing wrong? And let's go look at your entries and exits. Which stock selection is going to be, you know, in the workshop. So it's only $25, guys. I would value it at a few $100. It's going to be anywhere. I would say it's probably going to be about, you know, an hour and a half to 2 hours long. It's only $25, guys. So if you guys want to give back to the stream, or buy a ticket for someone else, that's cool. The link's in the description. which I haven't changed it yet for the workshop yet. So PayPal, Cash App, just label it, you know, what it is. If you don't want a ticket, just say in there, you know, workshop for someone else or something of that nature. So, but thank you guys very much. Thank you guys to the new subscribers. Welcome. Today's goal is going to be 15 likes. I think we can do that. I want to say thank you, first and foremost. And that's really all I got. That's really all I got right now. Do we have anything? Let's go look at DJT real quick. Is DJT bouncing? Yep. Awesome. Awesome. All right, let's do that. It's time to get it on. Let's get it on. So, we are bouncing up into the trade line. Let's go look at this daily chart. What do we have here? What is this? Friday, Thursday, Wednesday, Tuesday's close, and Monday's close up there. It's a bit of a support. Okay, so that was a bit of a support area. This might be this 30.95, 31 zone. We might want to watch for this to be resistance. I could probably bring this up a little bit. Right there. To, hold on one second. Undo. I don't know. It's so here's what I would do is I would say that this is a zone right there. And really I would keep it exactly like that. Okay, what I'm doing here, I haven't went back that far yet. So here you go. You guys see this area here at $30? $30, okay. So we already have that line there. So you got just about, let's see if this fails. Let's look at, all right. So now we know $30 is on that daily chart a massive support and resistance level. If this holds, we would expect a huge rip off of this level, guys. Keep your eye on level 2 and time and sales. There's a lot of selling pressure right now. Look at the level 2 time and sales. You have some buyers that just started to step in to get filled. All right. This is going to be interesting here. 15-minute chart is... Okay, I think we're going to bounce, guys. I think we're headed to 35. $34.80, $35. I do. I think this is headed to $35. $34.80 or so. It would be interesting if it failed. So I'm going to go ahead and try for this long. But this is, you know, this is let's see here. Yeah, hold on. Look at the 3-minute chart. Look at that sell side volume. This is crazy. We're going to find out soon. I feel like the volume on the 1 minute is telling one story while the 5-minute, I just have to wait and see. Look at this whole previous high holding. I think it's going to fail. I do. I think it's going to fail. I don't know though. Let me not think. Let's just react. Read and react. I don't have the chat up right now. I don't have this chat, so I can't see if you guys are typing anything or not. Let me get ready. DJT. What's GameStop doing? Is there anything else? Man, that 15-minute chart looks really nice. That looks really good. I mean, you could assume that you just broke above this and held it, but... So let's count. Let me see here. Yeah, I think we got to look for a long. There they go. They're going in now. 32, 50 cents. I'm going to try for a 32 long here. 32 long. Shit, I'm gonna miss it. I'm gonna miss it. Again, good morning. Welcome to the stream. My name's Justin. If you guys have any questions. Camera, so you guys can see again why the camera has been off, because it's been a little bitch. What's up, B-Rad? What's up, Brandon? How you doing, bro? My guy, it's good to see you. Shit, we could have just got those at 52 cents on the ask. Okay, there it is. Look, 50, 53, 50, 53 bid ask on level 2. Oh my gosh, the 15-minute trade line needs a pullback. We need to get this trade line up here. It needs to get up. You need to get it ass up. Oh no, that's not good. If this fails, let's say 15 minutes. I'm not gonna make any guesses. I could see this failing, but trying to hold VWAP, but then going back up to reject, and all these buyers that tried to buy here that could not come in with enough volume, turn the sellers on a retest back to this $30 level. So what I'm saying is if this fails, yeah, look at the sellers coming in hard right now, right? Look, something like this. It breaks that 29.50, hit it. Boom. Look at this zone right here. You guys see this zone right here? Right there. And VWAP is coming right up to this from yesterday. You can see it a lot better on a 15-minute chart. Look at that. Right there. And what is that also? That's prior day's VWAP. VWAP lines right up with that. Right there. Along with VWAP. So they're matched up again. We're right back at yesterday's VWAP. So let's see. If this level doesn't hold, this is a key level. In my opinion. I feel like this is a key level. And it does have support right on down to like 28.85. Sorry, let me get this correct for you guys. I don't want to give you guys the wrong number. I finally got my Miami shirt too, by the way. My Miami Hurricane shirt. $29.17, so $29. Is everything still... Like I said, guys, this, I'm gonna send this camera back. Dude, come on, man. I'm gonna be sending this camera back because it's crap. I think it's the camera that's broke. You are the expert, but DJT is a tricky son of a bitch. You're exactly right. This is just what I'm guessing. Like, I'm just speaking out loud what's going on in my mind and what I'm seeing here. I feel like this can hold, but I feel like you'll get a failed... It's either one of two things. It's either this is going to, like, pull back, try to shake the longs out, and you'll have people that'll sell on this pullback. This is the trigger. The trigger is getting ready to come. That lower term time frame, 1 minute, 2 minute, 3 minute, that's my buy trigger. I feel like we're going to get this fail, and it's either going to reject, right? It's either going to reject, or we're just going to reclaim it, and then it's going to go nuts. Because whoever gets short at $30 is going to have to start taking their money. People like me who have done this, we're like, let's see if they try to shake out the longs. There's people that are buying here. There's traders that may not know really what it is that they're doing. Okay? And they're going to try to... They're going to feel as though the level didn't hold. So, wait. Come on. Like, look at this volume here on the 3 minute. This is why it's tricky, Brandon. And then I look at the 1 minute and look at all this volume. It tells me a different story. Right? It's massive volume. I only need one AirPod, by the way. Uh-oh, here it goes. You're going to need more volume than that. Need more volume than that. So it's just wedging right now. This is going to be a beautiful breakout. I just want to see this. This is what I want to see. I want to see us, like, pull it back. Like, it kind of, like, breaks it. And they're like, oh, no. But then it, like, flirts. It hits it. Like it's going to reject, and it puts in a higher low. Then they get back above it. It reclaims it. Then shorts start taking it. Bang. That's really what I want to see. This is really what I want to see right here. So we'll see. If I see this, then I have to go long. That'll take us right around 11, 10:58, 11:05. Or if we start climbing up out of this wedge. Again, the only reason I do this is like I'm not trying to be predictive. I'm just trying to say, hey, this is what I see. If this happens and it's what I have projected, I have to take the long. If it does what I have kind of planned for. Like, that's me coming up with the plan. It's holding very well, though. But look at this selling pressure, guys. Look how red that time in sales is. Their sellers have not left. They have plenty of shares to sell. One second. Oh, okay. Nice. That's cool. That's cool that they're not, because that means if they do, then that means they're just, see, as a business owner, he knows this, you know, and he's making the right decision. Like, if he wants it to work, if he wants this to work, he can't just bleed all the equity out of it. Then it's just going to be like, you know, it'll be this company that just has no real worth underneath of it, because they just sucked all the equity out of the stock. You know, it's got to have some type of value. And if you know, I mean, selling is a little bit different than, you know, doing splits and you know, offerings and stuff like that. That's it. That's it. Let's see. Boom. Boom. Yeah, she's definitely tricky, man. This sell side volume up here at 32 is a mean one. You're a mean one, Mr. Grinch. Here we go. We got that trade line and VWAP coming up there. Shit, man. I should have grabbed it at 52 while I could. Give me one more pullback. Give me like 54, 53. I'm looking for like 53, 54 on the bid. All right. I'm looking at 32 calls right now, because I think I can at least get to 31.50. And if I get to 31.50, I should be at $1 there, which might even be close to 100%. This has a 32 delta, so if I just get $1, 32 cents on 50, I'll take it. That's 85%. But with a gamma of 13, that'll give me my 50 cents that I pay. If I paid 50 cents and I'm getting 50 cents, or if I'm getting $1 on that 50 cents, I know I got about 100%. Just to keep things easy. I don't think I'm going to get an entry, though. I need this at 52, 53, 54 for me to feel safe. There's 53 bid. They're getting worried. Look how those bids just really dropped. They dropped 8 whole cents. 53, 54, 52. I might try a 48. If we get, look at that, 38. Damn. I might be able to try to scalp this, like with the like when the spread gets crazy. I have right now 41 cents typed in. Not a filler kill, but for a good for the day. Good for the day. Good for day. 41 cents is what I have. It's still blinking. I might be able to take it down to 38, because I saw 38 flashing over here on the bid. So I'm looking at 38, 41 cents. We'd probably get 42 or 43 would be the sweet spot. 44, 45. See? It's patience. Level 2 is really nice and green. 45. Selling is still really on here, guys. Come on. All right, you know what? I'm actually going to use this here 43, 45. I have 42. See, as soon as I went to 42, I didn't put the order in yet. Come on, give me VWAP. I want to get VWAP. I want this thing at VWAP, guys. Like, I really want to hit this. I want 29.70 or so. And that would probably put us at 38 cents for those calls. Come on, baby. Come on. Shit. Look, these things are going to jump quick, too. Still a lot of selling pressure. I'm going to hold off and wait. Buying pressure stepping in nicely there. Still nicely. You know, it's followed up by some selling here. They're coming in nicely. This chart. Let me see something. Where were we at yesterday? Okay, so that's Friday, Thursday, Wednesday. Tuesday's low. Monday's low. We're trying to hold Monday's low right now. So I want to like quickly break this level and 38. Shit. See, the volume's starting to pick up, guys. Volume is starting to pick up. So far, I would say this is a higher low with lower highs. And the thing is like this 3-minute chart, notice where the increase in volume is. It's up there at 31. It's up at the top. So the sell side is really where that volume is. So for me to get long, I need this I need like 29.40. Because then at that point I know I can be safe and get like a nice entry. 44. Shit. I might go for it. Hold on. No. Look at this selling pressure here. That time is... Oh my god. I had 43 up. What time is it? 11 o'clock. Shit. God damn it. Come on, pull back again, baby. That was really low volume right there. That was really low buy volume. Don't get tricked yet. Fuck. I just took it, guys. Alright, let's see. I don't know if I'm in. I don't think I'm going to get in. Oh my god. They're going to fill me. And I am in. I don't... I don't like that I paid this. I don't like this. I think I made a mistake there. So I am in, guys. I am in this. I'm going to put a limit order at 58, 55. I'm going to start 38. Come on, we need buyers, baby. Come on. Come on, just give me a rip. Just give me a nice little rip. There's no volume. Fuck. I don't like this. Because out of nowhere, just like that, look at all that selling pressure. It's not bad. It wasn't crazy. Come on. 49. What am I going to do here? Boom. Let's go. Let's go. Let's take off. Let's go. Come on, baby. Let's go. Let's go. Come on. All right, I got some limit orders out there at 62 cents, 58 cents. Come on, 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 come on. Hurry, hurry, hurry. Come on, baby. Come on. It's not even showing my orders. Look at that. 71. Where's the 62s? You're going to go 57. Where's my order at? It's not, that's what I hate about Thinkorswim. Bang, let's go, baby. Let's go. All right, I'm going to take some off here, guys. Please, please, please fill me, 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 fill me. Come on. Just take some of these contracts off at 55 cents. Come on. Fuck. I'm out. Yeah, I got some off there, guys. I'm not out of the trade. I'm not out of the trade yet. Come on, give me the 58. Give me the 58. This has no volume. This is getting lower. I'm out of this, guys. I'm just going to get out of this. I'm getting out of this, guys. Even if this goes, look at the volume here on the 1 minute. What time? What, 11:04? Yeah, I'm out of here. I'm going to wait for another test of VWAP. I'm just getting out of this, guys. So I don't want to scalp it, but I don't trust this. So look at this 3 minute volume. I did not get it here yet. Like, I wanted to see this start to give us really the volume that we want. It could start now. We can still get back in. All right. But I still think you might be able to get a cheaper price and then re-enter it back at a lower. You guys got to do what you guys got to do. This is, you know, I'm okay at this. Like, I want to, like, that was enough time there where we needed to just start making progress. And notice how the volume here never got past. You know, like, how do I explain this? See what I mean? See what I mean? This is why you want to get the workshop, guys. You got in, then we're begging to get out. Dwayne Diesel. Nobody begged to get out. I was begging for volume to come in. Volume did not come in. Give me my money. Give me my money. You ever heard that? I know you heard that, right, Dwayne? Like, right, D? Nobody's begging to get out. What the hell are you talking about? I'm begging for buyers to step in here to fucking buy this thing up. Apparently I made the right decision because we're not getting an extension. Apparently we're not paying attention to the amount of sell side volume that is still continuing to step in here with lower and lower and lower buying pressure. Why would I stay in a trade there? I'm not begging to get out of anything. I would love for this to extend higher. But guess what? I think I got another opportunity at VWAP trade line on a 15-minute chart between me and you. I'm just saying, that's all. I didn't mean it no type of way, but I'm saying, don't tell me that I'm begging to get out when I'm begging for people to get in. Not you guys, but you know what I'm saying? I want to, listen, when we're in a trade, we want to start watching our buyers stepping up and our sellers stepping down. Which is it? Right now, they're not doing nothing. I'm in a daily contract. Guess what? I'm going to start fighting some real theta at 12 o'clock that we're, 2.5 hours away from for 15 minutes. Because I can split my game on Delta up to kind of know what it'll be. Here we go. You want to hold this and try to extend. You want to get that trade line through VWAP and start to try to extend here. You're still in trouble, okay? You're still in trouble if you cannot get through 31. You got to get up through this area. You got massive you have some serious pressure up there. Nah, you're good, Dwayne. It's all good. It's all love. I felt like I was coming off on, like, I don't want you to think I was coming off in like a hateful way. No. But I'm just not seeing the extension that I want to see. And I think that we could, I think this, you know, it, I talked about this a little bit yesterday, and I've learned this through all the years that I've been doing it, is we have to manage risk no matter how little, no matter how much throughout the trade. Okay, this is not a good sign here. Look at it. Look at this. The volume, top right of the screen. Okay, let me pull this up. Like this volume here, how can I do this? If I go over to this chart, I can do it. No. What I was going to show you here is you're getting a decrease in volume on the up moves, and you're getting an increase in volume on the downside moves. That's a recipe for disaster if you're long. You see what I'm saying? Like, look at this top right scale. Look at the volume there. And then look at that selling pressure. And then let's not talk about what probably we have yet to see, you know, still be up there at 39, at 30.90, 31, 31.20, 31.25. You know what I mean? So it's like, it's a trust thing here. You know, if it's just not giving me the trust that I needed. I'm hanging out with you, babe, and we're going out to eat and this, that, and the third, but you're looking at your phone turned to the side, and like you got all these other things that are just, you're throwing off some signals here that I feel like you got a lot going on, and I may not want to be having dinner with you. You know what I'm saying? So I just don't want to like, so this is my goal today, guys, is because, so I got long NVIDIA, or no, I got short NVIDIA at that resistance zone on, well, like Tuesday or Wednesday. And then I traded BABA. And then E-Trade shut down. I don't know what the hell happened. Okay, but I could not get out of Alibaba, and it was the worst feeling. And I'm like worried that I'm going to start to give back my profit from NVIDIA. And I got in, I don't know, but it was like I forget what it was. Might have been like 40. I may be wrong. I have to go back. Let me go to my orders real quick. Baba. Okay, so here we go. See, I have a lot of sell closes because I kept the, oh my god, I have so many. Okay, so here we go. Yes. 60. Let's see here. Which one was this? 11. 11. Where's the date at? 10:09. 11:06. Order status canceled. Hold on. Wait. Did I? Oh, this is the execution. Okay. I don't know what that is. That's weird. Anyway, I made some nice money with NVIDIA, right? I just got the rejection, pulled it back down through VWAP. It gave me the follow through. All right. So if I have price and time on my mind, if I'm in a daily option and I know I can take this from 40 cents, 42 cents to 55, I mean, think about it. If I go from 40 to 60, that's 50%. That's a 50% trade. So if I get a dime on 40 cents, you know, we're talking 20, 25%, 28%. We just got in there. I paid a higher price than I wanted to because we could have got it at 42, 43 cents. But I got in at 48. Yeah, they filled me at 48 cents. And then had orders at 58, 56, 55, 62. I took the 62 cent trade. I took the 62 cent order out because I was just not, I felt like we weren't getting the extension. You see how it's just dying now? It just is like the volume's given up. It's Friday. I want to see this 15-minute trade, though. Here's what I want to see, guys. I want to see the trade line on the 15-minute chart meet. Literally, I don't care if it's at this level or what. I want to see us hit that level, and that trade line is where my order will be. And I want to see what the volume is coming off of that, or at it, as I should say. Like, do sellers really step in, or do we... Can I see this stock really bring in buyers at this trade line VWAP zone at 29.65? You know, I want to see us hit it. Buyers are setting there because that tells me all our buyers are sitting in stacked up right in this zone. I want us to go down there, start to fill them all. I want to see that volume start to rise up on a, you know, even like a 1 minute or 3 minute. I want to see something like this. I want to see that volume at least get back to 1.6, 1.5 million on a 3 minute chart. Then that'll say, all right, cool. You know, we held it. Now we got that volume off of it. Then we'll look for a low volume pullback, right? Which would be a pullback probably to this wedge here. If we were to draw out a wedge, you get the breakout on volume, low volume pullback, bang, buyers step up, the trade line comes up, and now buyers have officially won. You got your first step up, or the third, it would be the, so you got buyers here, they stepped up, bang. Now, did they just leave here after they made this run from 27 to 32, and now they just went home and took their money and are going to enjoy their weekend and not risk any more money? That could be the case. We're seeing the volume completely die off, guys. Look at this. You have, you know, 135,000 shares being traded in a 1 minute chart when we did have at least a 500,000, nearly a 500,000. So that's kind of the way I'm reading this. So what I'll do is I'll wait because I think we have an opportunity for VWAP and trade line on the 15-minute chart. All right. So anyway, real quick though, I know I'm yapping, but Tuesday, it's either Tuesday or Wednesday, when E-Trade went down, it really put the vulnerability impression on me, because it was a worthless feeling that, like, my week was good. I did not have many issues this week. You know, I didn't trade Monday or Tuesday. I don't think we traded. We may have, but I was being patient, and we knew we had a lot coming up with earnings and everything. And look at these calls, back down to 39 cents 42. Don't forget your job. Your job is to take that number that you have and make it bigger. It doesn't matter how you do it. That's all you got to do. And there's thousands of different ways of doing that. So when I hit nice on NVIDIA Tuesday, and we talked about this, and I tried it again yesterday, and I told myself not to. You look at the top right. We were at resistance when I took it here. All right, when I took it here, we were at resistance. We broke out through that zone, retest, and now you're at all-time highs. And I'm trying to short at all-time highs. What a stupid thing to do. It's time to flip long. You know, or here, right? Or at 148. Now you know you have a prior little resistance zone here. It sold off. It rallied back to it. It tried to hold. And once you didn't get buyers to step up again, step up, step up, step up. Can they step up again off of this 48 to take it higher? No, they cannot. So what happens? Sellers really start to step in because they see that. Now, any of the buyers that were up here yesterday, let's see them flip from being that buyer that they were to either, I want to see them flip to be a seller. That's the, you know, the psychological reason support becomes resistance and resistance becomes support is because you have, you know, I just, DJT, right? Anybody that sold it down here or wherever, right? They were selling it. Let's say you had sellers here this morning or here yesterday. They just saw the stock higher. So they say, okay, when it comes back to $30, I'll be a buyer. I just saw it go higher. So you don't really, this isn't the chart really for it. But I would say, look, we have buyers stepping here, right? Buyers, buyers, buyers. So this $30 zone, what I would say is once you see it break and come back to it, these buyers that were holding it, right? So you have them here, right there. You have them all right in here, which they were kind of sellers and buyers there mixed. You had buyers here because they were sellers. They see it go higher. They say it comes back. That's the flip from being a seller to a buyer. If I buy something at $30 and it goes to 35, 40, I'm like, shit, you know, it just went higher. If it comes back to $30, I'll buy it. No harm, no foul, right? It comes back down to $30. I sold it at 30. I am now went from a seller to a buyer. right? That's why support becomes resistance and resistance becomes support. Same for buying, right? Or if you like bought at $30 and the stock went to 28, 25, 24, you're like shit. It comes back to like 29, 50, $30. I'm just going to get rid of this thing, right? So it breaks the level. Now I was just a buyer. It comes back to where I bought it. Now I'm turned to a seller, right? It's just like an easy way to kind of view the markets and how algorithms work. Other than getting technical with everything. This is good though. The longer we hold this, that trade line is just going to keep coming up, and that's going to provide support. We also had the 100-day this morning. We did not test and reject that 20-day. So you have buyers on that 20-day moving average up there at 34. So the stock is what? The stock is lower. That's why I think if you get this to go back to 34, all those people that were holding it up and a buyer at 34, you could see them flip to being a seller. All right. Just in, I know it doesn't seem like there were many because obviously the candle closed red, but that's usually why they say when you have a stock or anything that sells off and you have like all these sellers in the way, that's really what they're explaining, right? Like if DJT, if you had all these buyers up here at $48, $45, as you get to go, it takes a little bit to get there because of all the people that have owned it and they're finally recouping their money. Those buyers are turning to sellers as the stock is trying to climb higher. So it kind of creates a little bit of selling pressure on top of the stock climbing higher. But that's it. I didn't mean to keep yapping there. So what I was getting at is this here, if I'm up 25, 30, 23%, 18 to 25%, give me my money. I'm up out of here. Especially after I took a loss yesterday on NVIDIA by doing something stupid. And I had a really nice day Tuesday. It was like Tuesday or Wednesday. Come in the next day, and then to see me up, I don't know, I got in at like 48, 50 cents, 53 cents, and then they went to 78, 80 cents on Alibaba. It was like, damn, that was another really nice percentage gain that I couldn't take my money. I couldn't even put out a limit order because E-Trade was screwed up. And I know a lot of people were having problems with it. So that kind of instilled the, hey, take your money. Take it. Especially today. Today my job is to make money. Nothing more. If I get in and it pays me, give me my money. Anything over 12, 15%, I'm taking it. I'll take $150 on $100. I'm not scared to do that. I'll take my $200-$300. You want to give me 25, 30%? Cool, I'll take it. Remember, $400, $380, $400 a day, roughly. That's $100,000 a year. It's obviously I'm not sitting here saying that it's a lot, but if you can average that or average 400 to 500 a day on average, you're doing okay for yourself at the end of the year, outside of taxes and all that stuff. You gotta have all that stuff planned out as well. So it is an uphill battle for the most part, but I got some making up to do. But that's my yap for the day. That is my yap. Let's see, what do we got here? Is this thing gonna go? Here it is. Here's the cross. Here it is. It's flipping. Let's go. Watch time and sales right now. Watch to see if those buyers are gonna come in here. Still very selly. It was still blood red. It just flipped here, but it was still pretty damn red. Guess what, guys? And just like that, I'm back green off of that dumb trade I did yesterday. Just like that. My week is green. I was about flat. Commissions got me. And it was a small loss on Baba. I had to fight for that loss on Baba yesterday. Or no, NVIDIA. Even Baba. I had to fight for that break even. I think I sold it just a couple pennies lower and paid commissions. But Nvidia's lost yesterday. So that's two losses with, well, that's not really two losses, but because Baba was flat, I have one loss, one flat, two green trades. And we're doing good. We're sitting good. We're sitting good. The thing is I went a little bit heavier on that Baba trade than I should have. You know, because I was, again, I was correct on the trade, right? I was correct on it. I was right, and I got paid. I just could not get out because because E-Trade was having difficulties with all the volume that they were having. So, I was feeling good. I was feeling confident. And the trade ideal was just a trade back to VWAP. This was just a reversal back to VWAP. And right here. This was it, guys. And I posted this on Twitter right there. The 50-day moving average, that 97.50 zone. We said get short, look for a pullback to prior day's high. Not prior day's high, but initial morning high in VWAP. This was a nice, 35 to 45. You probably even got close to 50% on this, if not more. And it was only just a couple minutes worth of work. Take your money, go home, because you're seeing, again, low volume. You don't want to sit and try to squeeze what you think is, a rejection of 97.50. Let it show it to you. Look at this 15-minute chart. Where is the volume that tells you that these sellers are really stepping up in a big way? They're not. So you get a pullback to where? You're obviously going to initial morning high, VWAP, or trade line. Like, it's going somewhere. Where is that? Well, it was VWAP. Pretty obvious. Also, initial morning high. So we take our money. We don't try to get any more out. And the way that we stay in that trade is if we see that increase in volume keep increasing and increasing, and we go back 2, 3, 4, 5 days on a 3-minute, 5-minute chart, whatever you use. If I'm on a 15-minute chart and I know I want continuation, then I know I'm going to say I need at least, I'd say 1 million shares. Around 900,000 to 1 million shares I needed for me to get continuation on this thing. And guess what? We did not get that on the sell side of that trade. Nowhere near it. You had a little over 250,000 shares. But what did you do get? You did get it on the buy side. And what happened? It went higher and it held its high and it came in with a gap up the next day. All right. So it's really important. If that's the only indicator I had, I probably would use volume. And look at this. What do you know? It's selling off on what? Over 1 million shares. Over 1 million shares. It's showing us, it's giving us what we need. Look at this break and retest. Guys, I'm probably going to trade Baba now, guys. I'm sorry. I think I might have just found the trade. Hold up. And they had the stimulus stuff too that I forgot about. I had errands this morning. So I do apologize for that. All right, let's get this thing on a roll here. Let's go. Let's lock in. Let's lock in. I'm going to make this a little bit darker. Boom, boom. Okay. I'm actually going to get rid of that. That's crazy. That's actually crazy. That's actually insane. How's everything? Okay, we're good. We're Gucci. All right, let's do some analysis here and see if we have something left. How much is this down? And again, congratulations on Upstart, guys. For those that bought it with us, congratulations. All right, so this is down a little over 5%. We'll say 96. Where did we open up? 96 at 96.50. 96.50 to 94. So 5,650. So that's 5,6 for this 250. What is the ATR here? So these big days with decent volume, you usually get 10. What is this? What's the percentage actually? What is the percentage? So 6%. And about 5.5%. So look at that. So this thing's probably done for the day. So Baba may be done for the day. On a day with this type, with what day was this? 9:30. I probably can't see it. 9:30. Okay, yeah. So you guys can see here, these days here where it have massive volume. This sell day here on 9:30 on the bottom right, the top right there. You know, these things. Look, it's coming in with 5 to 6 million shares, 5.5 million shares on a 15-minute chart, and we haven't even went over 2.5. We haven't even went over 2.5. So I think this is not. I think this is done. That's why coming in the day late is a bummer. Let's see here. Boom. We might be able to get a continuation up there at the 50-day moving average. 96.23. 96.23, 96.23, 96.23, 96.23. 96.23. Let's go back to DJT. Okay, there we go, guys. There we go. And what did we say? Look at that. What did it do? It just wicked right in the VWAP. That was literally the buying point. So they're there. You know, we said that. This is why I really hope you guys, and there's still so much that I'm not even going through here. That 2970, 2980, this whole area, 2960. I told you guys that's where we wanted to enter. You know, or at least let DJT show us that we can climb higher. And I felt like that's what would have to happen for us to feel confident about a long. Now we need it to continue. Now the problem is you can't keep it up. You need it, you know, pop a Molly, catch a feel. I don't know. You got to do something. You better call old Rhino. Right? Because it's not going to end well. You know, it's just not a good look. It was over before it started. Alright, let's see here. Let's use this wedge here. Let's see if we can get this $30 zone to hold right there with the trade line off of that wedge. I'm not using the top of that because, which I should. You know what? This might end up doing something like this. And it might stretch itself out. What is that, 12 o'clock? So that's 12 o'clock. Let's see here. And look at that. I wonder if that's kind of what we get. And then lunchtime it just fails. Let's see. Like I said, so what I'm just gonna keep it at that. I'm watching this whole area here. I'm still nervous about it. 30.85, 31. We got to get through it. You got to get through this area up here to feel safe. You got to break through it with volume too. I wouldn't consider this a lunchtime breakout either because it's not lunchtime. It's not past 12 o'clock. 11 o'clock to me is not lunch. The markets are still going. 11:45 to 12 o'clock, sure. They might start to be closing some of their early morning trades if there are any. Man, this sucks. It just can't seem to get up and hold and continue, but it also is just not selling off. So it's weird. I don't know. Let's go over to the SPY. Damn, I do feel good today, man. I feel good about that. Did my job. You know, did not overstay my welcome. Started off. That's all we need. Just give me my money. But yeah, I want to say I do apologize because I just don't want to I don't want to be that person who can't take some criticism, because I encourage criticism. You know, the reason I talk these things out loud is, for myself, but for you guys too. So you guys can get an understanding of what it is that I'm looking at, what it is I want to see, why it is I want to see it. And if I don't see that, why I'm going to manage my risk, which is the obvious. I'm either not, I feel as though I'm not getting the continuation I need. When you're in a daily option, you have to remember that you're fighting time, especially on a Friday, especially if you're at least $2 out of the money. If you go anywhere outside of that 30 delta, you're really asking for trouble. And I was at 30, 32, so I was kind of like, standing on the diving board that we hooked up to the bridge, and it was like I was just sitting there jumping on it, like just asking for something to go wrong and find out the hard way. Okay, so I was not going to give that thing any room. I hear a sound. You know what I'm saying? Anything that I feel is a little sketchy, I'm out of there. I'm already playing it. I'm already playing it close. I'm already pressing my luck. So, but that's all. This is the kind of view that I have, or I have built for myself. Just doing this for as long as I have. And it is a good feeling. I still remember the days where I'm just like, is there a way to not necessarily predict the future, but how can I kind of do exactly what it is that I do now? Why I think this is an ascending wedge, we might start to see a pullback. Let's see if we get some volume in here. You can do it. You can do it. I'd actually move this to yesterday's close, and I'd be cool with that. That looks a lot better, right? Put it off prior day's close with the initial morning high. Shit. Today's a big day. Today's a big day. This could be, depending how we close. Like, look at this. Look how far you are above. Hold on. It's doing it again. Hold up. This is crazy. This is so crazy. So crazy. Rock on. I don't know who's buying the SPY at 600, but I give it to you. There's no way I could do it. I stopped after 399. I was like, 400. I can't do this no more. I can't buy the S&Ps. It's just too much. What are you doing, turkey butt? Hi, mama. You wake up? Let me go let her out real quick. let's see here. All right, let's go look around, guys. And again, if anybody has any questions or anything, you guys can throw them down below. Let me see this really quickly. Let's go here. We had so many earnings yesterday. Okay, TLT, guys. This was my, I was keeping an eye on TLT here. Let's go look at yields. I wanted to see if this held. We already hit that. We hit that. It's not going to. It might. So I was watching this zone right here at $92 on TLT. Look at the Qs. The Qs are underneath and done making highs. The SPY's ripping. Oh no, that's the Dow. SPY, new highs. IWM, no new highs. No new friends, no new highs. That's crazy, guys. Look at this. So here's the second part. See, this is why, if there's anybody here, look at these DJT options, $47.49, and you're at $31. Dude, I got in here. I got in at that price and took these things damn near to 60 cents. At 30, at the low 30s. You've went 75, 80 cents, and you're less. It's less. It's $46.49. So if you don't understand how to trade options and don't know what you're doing, please, one, join the workshop. All right, it's only $25. Just the donation link is in the description. Again, I'm raising money for a thing that I want to do here for the stream, and this is exactly why, especially when you trade daily options, you have to understand you're in a race against time. And it's important to understand what happens at certain times of the day. The difference between the 10 o'clock theta, the 11, the 12, and the 1 o'clock and the 2 o'clock. There's so much that I don't say on these streams. I'm telling you guys. And I'm going to be going over it with, I'm going to be going over it. I'm just watching this and feel so bad. 49.52. They're not stepping the asking price up at all. At all. That's a shame. But that's why we do what we do. You know, like I said, what did I say? We have 4 15 minutes. We have 4 half hours. And the reason I say that is because we can split that delta right on down. What's my delta for every 15 minutes? Every half hour. Okay? Things like that. So I know, okay, well, if I, you know, for every 15 minutes, I'm going to lose, like, it's going to go up or down by, you know, 0.5 or, you know, see, I'm also thinking about the upside and downside move, but, you know, so anyway, the workshop, it's only $25. People up here are paying the same price that I got in. And we were able to take that 48-cent trade all the way up to 55, 58 cents. And that's a shame. That's a shame. Remember, 20 cents on 40 is 50%. So 10 cents on 40 is what? 25%. Doesn't seem like much, but it adds up. Let's see here. I feel this is why people fail, because they really don't have the education that they need. 44.47, and you're 75. You're almost $1 higher than where I bought it, than where we bought it, and now you're down money. Told you this was going to be a tough zone. So let's see here. I may end up getting short if we go to break out and you kind of just see it fail. It tries to put in a that lower high to extend off of this. Like after it tries to extend off, during that extension it tries to pull back and then it like puts in a lower high and then that's it. I think we can take this back down to, I think we can break 30, but I think we can get $28, $29 out of this at least. You might even get lucky and get low a day on it because everybody's going to give this thing up. Maybe go out to next week. Look at next week options. Make sure if you do that, anybody going short. Hold on.
Authorizes additional $300 million share buyback. That's Charlie Hotel Echo, CHE.
Make sure you guys are looking at Donald Trump's schedule because if he has some type of event, speech, or anything, that could set this thing off. So be aware if he does or doesn't have something going on that's going to be televised or whatever. Well, there it is. TLT did not hold. We can turn this red. It might still be intact, but I don't know. I have to go back and look. Wow, 43 cents. Wow. This is why. So you guys are seeing exactly why people consistently lose money, and they continue to spread the false rumors that the market's a scam. Sure, we all have our bad days. You know what I'm saying? We all can have our bad days, but we just got it. A little bit more than what it is. Like this thing is up $1. You've only had a half hour go by, and the options prices are cut by nearly 15 to 20%. You know what I'm saying? So I know it may seem like, and again, I'm not always going to be this perfect or anything, but there's a reason why I took my money. There's a reason why. It just was not giving me what I wanted to see in the time and in the manner that I wanted to see it. Because I know that 12 o'clock, 11:45 theta is a son of a bitch. It's a son of a bitch, you guys. So anybody that's here, understand Fridays, and you're thinking about a position at 10:30, 11 o'clock, think twice. Just give yourself time. Unless that stock has continuation and has the momentum, then you should have already been in it at 9:45, 10 o'clock. That's the other side to that. I wouldn't do it. I wouldn't do it if you don't know how to do it. I caught the bounce back. That's all I needed. Fudge it. I didn't get the perfect entry. I paid up a little bit, but I got my I don't know 12, 13. I don't know what. 10 cents on 45 cents, 48 cents. Fuck, give it to me. 18, 20%, I'll take it. 23, whatever it is. It's like 18 to 23%. Alright, so here's the chart. And again, here's the thing with that. That wasn't the goal. The goal was to hope that buyers would step up. But when I play the tape back for everything that DJT did today, you had this pullback, right? And anybody that was down here, you had them step up and buy again. Bang, nice extension. Pullback, previous, initial, this is important because you had a continuation trade and you cut and sliced right through VWAP. You had some decent volume, but them boys put in a double bottom and held and came in a hell of a way down here and you just brought that thing right back. That psychological, sell off, boom, we'll say 15 minutes later, you're back to the sell off point plus some. You're even higher than where it sold off from. That is a very bullish signal. That's a very bullish signal. Right? So then we got him to step up again for the third time to really blast this thing off. Boom, that trade's done. So that's why when I got paid here, I had to get out of this thing. Look, right here. Let's see. Let's see. Even though it's lunchtime, the volume is getting demolished here. I would really like to see DJT up at $34, but I don't know when that's going to be. I don't. I wish I did. I just feel like it's Friday. You could have people leave. They made their money. They're done. And I'm just trying to go back in for leftovers, and the vultures pretty much took the food with them. And I'm just, I'm just a vulture just following the scraps that are dropping in the air. They ate. But it's all good. Again, I had some things to do this morning. Yeah, this thing is getting to be a bit overdone. But not really. That's wild. I don't see why DJT can't try to give you one more bounce, but it needs a pullback first, obviously. I think of the test of the 20-day, and that could happen Monday or Tuesday, Wednesday morning. It doesn't have to happen today. More than likely won't. This type of move, that right there, that's going to ruin it for everybody, being that it's a Friday. They done did what they were supposed to do. They did their job. And they're gone. Alright. So let's pull up NVIDIA. Let's pull up the SPY. Let's pull up Google, Microsoft.
Seek details on China sales from top semiconductor equipment makers, including.
So I wanted to show you guys. There's a new
Electron and ASML that in a letter, as reported by Reuters now.
So I'm thinking about grabbing this. I'm not thinking about it. I'm more than likely going to. I don't know if I can. I don't know if I can show it here or not. I don't know how YouTube is. Like I see. So if anybody knows anything about guns or anything, let's go here. So I'm thinking about getting this. And this, I don't know what color, but it's so weird. They went up. They went up a little bit. So I'm thinking about getting a new piece. This is a smaller barrel. It's a smaller barrel. So yeah. So after this, guys, let's see here. Let's go here. So I saw this, and I was like, damn.
Following a hotly contested election, what comes next? November 13th in New York City, an elite group will gather, discussing what the business of tomorrow will look like.
So there were some accessories here. I don't know where it's at. Oh, where is it? Right here. Oh my God.
Yo, we
Tell me that's not a butte. Tell me that's not a butte. I don't know. So I figured I'd share that with you guys. I don't know if I'll get in trouble now with it or not. But like, you know what I mean? They can make short form films on YouTube, so I don't know. This is 18 or over, so I don't know if they shouldn't say anything, but all right. So I'm gonna make a couple phone calls here, guys. If you guys need anything, and if I have any other trades, I'll let you guys know. I'm not done for the day, but I gotta make a couple phone calls, and I gotta get my charger. Gotta get my charger. You guys could hit the like button.
Data popping to the highs now, $40.98. Indian November Oscar Delta.
What are you doing, turkey butt? So yeah, guys. I'm gonna keep. Okay, so look, the Qs just broke out. They did break above. We'll see what happens up here at these previous highs at 515 or 514.50. IWM has not yet broke out. So I'm going to go feed Abby, my cat, and we'll watch DJT here. So what did we say? We said that breakout. Guys, are you guys watching this? Look at this wedge that we put in right here, wherever it was. And what did we say? We said we wanted to see that breakout. I thought it did it there. And I don't know if you would consider that the breakout right there. And this is the breakout, pullback, and that's the lower high that we're talking about. But that's pretty much the sum of it. You know, the breakout, it pulls back and then puts in an out of nowhere lower high for it to start failing. And then I want to see if we can break this level. And I'm targeting 28, like 28.50 to 29. I would target a fail if you do not break out higher to there. You know, there's a lot of things that could happen. You could just sit here for the remainder of the lunchtime and maybe break out at the end of the day. You know, I think you had a lot of people make money on this move higher, and they're done. And they're probably more than likely not going to risk it for the biscuit, unless you really have some volume that comes in up through here. Like, look, the volume's just dying. You're going higher while the volume's just dying off. So I'm glad I took my money. I could smell and see that things were not looking good for the for the move higher. I'm sorry, for the continuation. Come on, Abby. Come on. So yeah, guys, I gotta make a phone call real quick. I gotta make a couple phone calls. I'll be here. I'll be here for the rest of the day. Just working, looking for opportunity. I'll be going through charts, Google, Microsoft. I still want to go over. I want to see what happens with DJT. If it ends up failing, I may try to take this to, like, again, 29 would really be my target for it. It's got some decent volume today. I won't discount that. It does have some volume. So yeah. That's that. Sorry. I know I'm clicking right in front of the mic. If we could take this thing to $34, $35, that'd be sick. Look, guys, I mean, it's still not even where we bought it. Like, I mean, it's right around where we bought it. And it's at $31. Here it goes. They're starting to try to get this thing going. So that's why if you're in a weekly option, a daily option, you take your fucking money. I don't care how little, how much. And you keep doing that, you're going to be like, damn, I actually have an account now. I actually made some money. Damn. Do that 4 or 5 times a day. You know, take your 20%. Do that 4 or 5 times a day.
Just a couple of points below S&P 6K, 59.96. I think we were a couple points higher a moment ago. VIX still remains below 15. Next week's going to get busy. 11 more S&Pers, including Disney, Cisco, Home Depot. We'll get CPI, PPI, Waller, Powell, and retail sales.
This pullback is going to be big.
Great stuff out there. And you saw, by the way,
This pullback here is going to be big. This pullback right here, this one's going to be big. Because if we pull back and hold it, then you might get a lunchtime breakout. So I'm going to turn on CNBC real quick. And we will we'll meet back up in like just a couple minutes. Again, I'm not going anywhere. I just have to make a phone call. And okay, so look, TLT reclaimed 92. You know, I did know that this level was a little how do I say this? The level was, you guys can see all through here, it's like it goes all the way down to like 91, 90 to 92. It's like 10-15 cent wide.
Robert Lighthizer to run the U.S. trade policy.
Robert Heise, who? I was honestly thinking, guys, that I was thinking about reaching out to DJT, Vivek, any of them, and all of them. Steve Mnuchin, and seeing if I could get a job. See if I could get a job with the administration. You know, just kind of doing like the side quest stuff. You know, obviously I'm not a lawmaker, so you have one life. Enjoy it. You know what I mean? Just go after it. Just go after it. Whatever it is that you want to do. That's what you have to do. You have to. Because you might find yourself getting into positions and going down a path you never expected was for you. Don't think that you're ever worth less than the best.
I think we do.
All right.
You know, we were very lucky enough to change our target to 6,100 when we did. We saw that.
I just hate when people. I hate when people feel like they doubt themselves or they feel like they're dumb. It's just like, no, you're not dumb, bro.
Boeing set to explore
Just do it.
sale of
Like
jets
maybe you might not want to do stuff like that or something, you know, and that's fine too, you know. But if you do,
BA Boeing
don't talk yourself off the ledge. Get back up there and jump.
shares of
Just do
Boeing
it.
getting a pop on that.
Now, how would you say, like, how would you go get a job like that? Well, you could do things by thinking out of the box. There's a multitude of things. So Steve Mnuchin was previously the Treasury Secretary. So you could start with doing a little bit of background work on Steve Mnuchin. What's his email address? Who does he work for? What's their email address? Hey, I'm trying to get in touch with Steve Mnuchin. You could make a short. YouTube, Twitch, Twitter, Rumble, Kick. Hey, and pound it in them. Pound it in them. Or whatever it is that you want to do. You know? So there's like a multitude of ways to do things. Abby, I'm coming. So let me go feed her real quick. I know that was a little ramble, but I don't know. I just figured I'd share with you guys. It was kind of just like a thought. Because there's always work to be done or to be had. They can always use help. Let's see here. 92. So yeah, Google and Microsoft. I know Microsoft was up at this resistance zone. It still has a little more. It still has a little room higher. 430 is where I would target Microsoft. But I think it was Google. Yeah, Google's kind of double topping up here. I know Abby's hungry. I gotta go feed her real quick because I've been giving her some medicine. Wait, hold up. Hold up, Google. This is why I was so frustrated yesterday. Is because I wasted my time on a stupid trade that I should have never been in the first place. And I missed out on Google yesterday. I was so mad. I couldn't get in Google Tuesday or Wednesday. Couldn't get in it Wednesday because E-Trade was down. I was lucky that I got in early on NVIDIA and got out. And then when I went into Alibaba, it was just bad. It happened around like 10 o'clock. So here we go. That's a break and retest on Google, guys. 180. He just broke above that previous resistance zone. And I think you got to look for a move back to 185. Back to 185 here. Let's go do our work. Shit, we might have to wait a second. You're going to have to wait 1 second, Boobo. Hold on 1 minute. Man, the SPY's going to start turning here. Let's see if this level breaks. Let's see what the SPY does. This is going to be important because we got to see how this weekly candle closes. This is a really nice breakout. And I would imagine we leave like at least a little bit of a wick. You know, so like half of this gets cut, like a little bit of this gets cut. You know, maybe we close at like 590, which is still 7.5 points away, guys. That's fucking huge. You know, that's huge. So let me get rid of this real quick. Let me go here, which is the SPY. Man, the sun's shining in and I can't see. Again, listen, guys, I'm doing a workshop. I'm trying to raise a couple dollars for the stream, and I'm trying to do a. I'm not trying. I am. I'm doing a workshop to be able to prove to you guys and to prove, which I'm going to make a video, not with anybody's faces or anything, but sign up for the workshop. If you want to donate a spot for somebody else that would like to learn, it's only $25. All right. $25. We're only going to do about 15 to 20 people, and sorry, I'm a little. All right, here we go. Okay. I just can't see because the sun a cloud or something just came out of the way. At least on TradingView, VWAP trade line is at 597. 597.14-ish. And look at that volume coming in up here. This is going to be something. So listen, I'm doing a workshop. The link's in the description. I did not put workshop yet on it. So if you want to donate a spot for somebody else, sign up. The money that's generated from it's going to be used for the stream. So with your help, we appreciate it. And not we, but me. I appreciate it. I greatly appreciate it. There's a couple of things that I want to put together, and I want to give you guys stuff to take home as well, so we can fix whatever it is that, whether you're not making those leaps and bounds like you should be, or you're just not finding success, or you're finding success, you're just like, you know what, I need something to help me keep me on track. I assure you, you're going to look at the markets differently. I will promise you. I promise you, if you implement it. See, the thing is, I can't promise you these things, but you have to be able to implement it. You have to take what you will learn and actually physically do it. And you may need to change. You may need to start doing it off slow because you may not be used to it, or you got to throw all the old habits in the trash. I want you guys to be able to find success. I want you guys to find more success. If you're successful, I want more. Let's go. Take it up a notch. All right? You can also donate a spot to someone. It's only going to be about 15 to 20 people max. 20 people, I'm cutting it off. Because it's not about the money. It is about being able to prove to 20 people that if we can get a success rate of 95% of the people that can just do better and make money and make more money, I've done my job. And I have proved that the market's not a scam. I'm here to do that. I don't want your data. Listen, all these people use the stock market as, hey, they're doing this, they want to teach people and learn and this, that. No, they're using the market to steal your data. They're using the idea of learning how to trade and buy and sell stocks as a way to get into your personal business. Know what it is you like, how long you like to be there for, what it is you use, all of your information, your data. The majority of them are data brokers, guys. They want your data. They're not worried about teaching you. Sure, they want you to learn, but they're using that as the blinder to what's really going on. I don't want that. I'm not here to rob and shake people down for money, but I would like to open up. I would like to do this workshop if you guys would allow me. That link is in the description, and again, if you guys want to donate it to somebody else, that would be cool. I'm really excited about it. It'll give me the first time that I could put something together for everybody, and again, we're going to have something for you guys to take home. And I really, honestly, truly know for a fact inside that you're going to gain value from this, that you should see a difference the first time you start to implement these actions. There's specific actions, specific things to look for. So if you appreciate the hard work that I do here on a daily basis by, giving you guys my insights on markets and just coming on here live and trading with you guys, you can show, as a token of your appreciation, you can buy someone else a ticket. Just buy yourself a ticket and come join, It's not going to be like what you guys may think. Again, I'm only doing this because there's something that I would want to do here for the stream, and I need your guys' help. So, thank you guys for that. Appreciate it. And let's see. Let's see here. All right, I'm going to go feed Abby really quickly. If you guys could, hit the like button, subscribe. I'm not done for the day. I think we're going to have a good afternoon, especially in the overall indexes, because the volume has been crazy the past couple of days, but we still have some decent volume today. So I'll be right back, guys.
There's going to be two reasons, and so I thought it was a good entry point. Well, I think there's just some algorithmic pair trading happening between the two.
How about you?
We bought it.
You own it too.
Yeah, we bought it back in August of 2023 because in the industrial space at that time, we were kind of confused about what was going to be literally driving industrials, domestic growth or international growth. And Uber is technically an industrial stock. And so we still like the name a lot. We would be adding, but also you think about the sector composition. Should Uber be an industrial? Just like should Tesla be a consumer discretionary? So if you're running sector money, you absolutely have to have some exposure to those names.
Okay. The other thing that worked pretty darn well, financials up 5.5% as a sector, but some of the names within the space, Goldman Sachs up 13.5%. These are all gains this week. Morgan Stanley 11, Bank of America 8.5, Wells and Citi 8, JPM 7%. Kevin, you bought some more JP Morgan in your Devo this week.
We did it before the election, Scott. We had it called away on standard expiration on 10/18 at 222.5. Bryn, you and I were talking before the show. Sometimes stocks get called away. JP Morgan pulled back a little bit. We built and filled in our whole entire position. And then we saw what happened on Wednesday, which was fantastic. So that was a scenario where we didn't have any covered calls going into the election. But since then, we're writing them, and I would expect that we'll be doing so on JP Morgan again next week.
I mean, there's Shan, euphoria sweeping through the halls of investment banking areas of these institutions now, thinking about these bright horizons that lie ahead on M&A and all this pent-up demand that's out there. Regulations coming in. How should we think about this space now?
Yeah, there's two legs to this. It's deregulation at, sort of the industry level, and so an accelerant to realizations to portfolio companies, particularly in the private equity space. If you look at areas like industrials, technology, and consumer, you also, Scott, although it had already been diluted, this changes the game once again for Basel III Endgame, and so you're getting these two lanes of potential acceleration for financials. And so, and the last thing is really thinking about if there is a thrust for growth, you could even touch that regional banking component of it because their credit book might look a lot better at the end of next year than it does now. So it makes sense. I think people looked at 2016 and we're sort of looking at that playbook. It's a different playbook today, but it doesn't mean that there isn't the same type of impulse for financials right now.
Bank of America, upgraded today to buy from neutral over at Citi. Price target to 54 from 46. I mean, the risk-reward paradigm has seemingly changed.
Yep.
Now you have full-blown tailwinds rather than some tailwinds but potential headwinds. I don't hear people talking about headwinds at all now in this space unless you were to get, the economy slowing down, but people are even taking that off of their bingo cards.
I'd be really happy if we never talk about price to tangible book again. Remember when we talked about all that, we were worried about the balance sheet. I think what we're seeing is the theme is finally working. What's the theme? Scale. So Bank of America because of Merrill Lynch, JP Morgan because of the gold standard, Citigroup because of the turnaround, Morgan Stanley because it's the last of the big box retailers in terms of the brokerage business, Goldman Sachs because of investment banking. And so those scalable business regions because of the regional banks that have over-reserved that are probably going to see some combination and or use that over-reserved money to buy back more stock and pay dividends.
Have I got any private equity people up here? I mean, does anybody own any of the PE firm stocks?
Blackstone.
Because, I mean, those are ripped, too. We can show some of them on the week. Ares, KKR, Blackstone, BlackRock. I mean, a lot of these places have just had incredible gains this week.
The assets
Carlyle.
The assets that these PE firms that acquired when interest rates were 0.1% are pretty amazing. And so what's going to end up happening now when you start to see interest rates settle in there, I think you're going to see even more activity. And so given the also private lending that a lot of these private equity companies are doing, I think these stocks look very, very good.
We have a news alert I want to get to real quick. We'll come back to our conversation in a moment, but Pippa Stevens is going to tell us what's moving with Boeing here. Pippa.
Hey, Scott. Well, Boeing is reportedly exploring a sale of its Jeppesen unit, according to Bloomberg, which said that the sale of the company, which makes navigation charts, could fetch as much as $6 billion as Boeing does seek to lighten its debt load. Now, this comes after Boeing CEO Kelly Ortberg told CNBC last month that he would rather do less better than doing more and not well when asked about the possibility of having to shed assets. You see there the stock is fractionally higher. Scott?
Okay. All right. Pippa, thank you. Pippa Stevens with the update there. Shan was talking about, regional banks. The Russell up 8% this week. It's the best since June of 2020. The KRE is having its best week in a year. How are we thinking now about a renewal for regional banks without some of the overhang that we've been, talking about for the last 2 years, it feels like?
So in Q4 of 2020, we're saying the economy is going to expand. And when the economy expands, you buy small cap value. And so there's actually an ETF, SVAL. We sold that at the end of 2021. It was a great trade. But what it owns is the regional banks and industrials, but it has a quality screen. And that was up 9% the day after the election. And so if you wanted to own a quality regional, I think that SVAL is a good way to do that. I do think it's interesting about what Shannon hit on. If we really get like a Basel III redo or takeaway, a lot of these banks have not been doing loan growth, and that's where this growth with private credit has come, because they've been doing the lending that the regional banks have been not willing to do. And so that could open up, if that actually transpires, where the regional banks actually can start growing again. I will say, it's like, as long as rates, you have to look at the balance sheets. SVB collapsed because they had a poor treasurer. They didn't manage their balance sheet. But I think playing high quality regional banks, that ETF is a good way to do that.
Yeah, I mean, Basel III was already going to be watered down from what it was initially feared. Yep. The banks and the CEOs had successfully sort of lobbied for that to happen. Now you have a fully diluted pond of regulation as it relates to that, right? They're going to be even more watered down at this point, right? All that's beneficial.
Yeah, I think people were buying the big banks because of the liquidity, just like they went to big cap tech when they didn't know what they wanted to do. Now I think there's a better feeling that from a fundamental perspective, you have a bid now for some of these regional banks, especially like what Bryn talked about, clean balance sheets. When you look at small cap banks like below $10 billion, a lot of these companies have amazing cash flow, great balance sheets, and some of them actually even pay dividends. And so I think that's something that's been kind of lost in the era of investing the small cap value. So we're big believers.
So on that note, Shan, I find it, we mentioned we get into the regionals because we talk about the Russell having such a strong week, up 8%. Tony Pasquarello of Goldman Sachs just put his weekly note out where he's talking about what he calls a, quote, shift in thinking, where he says, for a long time now, you've been paid to stay in the pocket and simply own S&P in its off-the-shelf cap-weighted form. I tend to think the next phase of this game will favor equal-weighted strategies, which is to say SPW over SPX. It just speaks to you don't necessarily need to lean so into what's the biggest, that now you actually have runway for what is mid-caps, small caps, equal weight versus cap weight S&P. What do you think?
I think it's very easy to give this argument because you know that I have been quite constructive on small caps for some time. However, I think what you really want to think about is what are the drivers of that move to large cap growth, for instance, and you were really looking at it in terms of what Brian was just saying, strong balance sheets, strong free cash flow, the ability to be a fortress, if you will, in a time of uncertainty. I think now what you're looking at is that historically, when do smaller companies do well? When they have a foundational tailwind of economic growth. Boy, that seems like it's going to be a catalyst. Two, in a lower rate environment, right? We're probably not going to see rates going down as much as maybe we had thought a few months ago. However, the trend based on Powell's comments yesterday is clearly to the downward direction, as is inflation. The last thing, Scott, is that it's really about the universe of these companies and the representation of some of these more cyclical businesses. If we're looking at a potential industrial influx of activity, there's a lot more representation in this universe in small caps. So I think it's less about just a cap trade and valuation, and that's the important thing. It can't just be about valuation. There has to be catalysts.
You guys see Coinbase this week? Kevin Simpson, you own it in the Q DVO. It's only up 45% this week. Bitcoin's hit a record high. You know, you have people coining Trump as the Bitcoin president. It was just one of the asset classes that ripped along with so many different other things in the, you know, quote unquote Trump trade.
Well, we honestly didn't think it was going to go up 40% in a week, so I'll confess to that. But it was a proxy for crypto. It's an actual business. They're returning to profitability, trades with a 33 PE. Again, it's in our growth strategy. We'll get to a few other names in there today and have a lot of fun on a Friday. But when these stocks rip, boy, can they rip.
What about what didn't work? You know, staples, utilities. Brian, they did nothing this week. Among losers in staples, Dollar Tree, Brown Forman, Dollar General, Archer Daniels, they're on, you know, losses 7 to 4% respectively there. China names, obviously, given part of the announcement today, the package over 5 years to tackle the local government's hidden debt. A lot of the China-related names are down. Bond proxies, as I said, staples, utilities down because if you do have the prospect of higher rates, if the Fed's going to be a little bit slower, if the Trump agenda is more reflationary, then you have the possibility of rates at the longer end, deficits increasing, rates going up, bond proxies going down.
Yeah, I think we learned pretty quickly that it's not just about new power generations and all of that with AI coming into utilities. You actually have to run a business that has, excuse me, cash flow and yields. And so I think that's why utilities got really, really expensive in the third quarter. So I'm not surprised. We've been underweight staples all year long. The only staple stocks we own in our U.S. portfolios are Costco and Walmart. And so the other areas have been expensive. I think people were hiding in those names, and they're not growing anymore. And so from a product and service basis, fundamentally, I don't think people are using those products either anymore.
What about healthcare, Bryn?
You got to pick your spots, right?
Because a lot of them were down this week.
Well, I think pharma. I think, you know, RFK Jr. gets a position somewhere in there. And I think with pharma next year, that to me is the area where you could see just a lot of mess. And we'll see what position he actually gets, what's he actually able to push through. But to me, I think within the pharma names, not healthcare in general, but pharma, you want to just be mindful of where his eye is on, because I think that will cause a ton of headlines on the wrong way.
Yeah, to say the least. And so we're putting the cart before the horse, too, in many respects. Shan, how should we look at this space?
Well, I think the other thing that you're seeing is that you know, we've always viewed healthcare as being a combination of both offense and defense. However, there's a lot easier ways right now to garner offense in your equity portfolio, and there isn't this overhang. I think, you know, when you look at the platform for Trump 2.0, you know, that healthcare question remains. And so that's why even on the private side, Scott, looking at that realization of healthcare companies in the private equity space, maybe not quite as much of a catalyst as those other sectors that I mentioned earlier.
All right, quick break. We come back. Bryn has another new buy. We'll tell you about that. Kevin Simpson's got a handful of new moves as well. We'll do all of
You got this.
All right, welcome back. Let's get to these moves that I mentioned. We have Bryn bought Dell.
Yeah.
How'd you do that?
Michael Dell, Houston-based guy. Okay, so
That's why you did it? Michael Dell's like
I'm just
based
giving
in
a shout
Houston?
out.
Easy enough.
All right,
Giving a shout
okay.
out.
Next, Kevin Simpson. So
Don't
you
throw shade. I'm just giving a shout out.
All right.
Okay, just giving a shout out.
All
Okay,
right.
everyone chill out. Okay, so if you go back to the NVIDIA discussion we had earlier, the hyperscalers are telling you what they're doing. And I'll just give you a line that Satya said on the call. He's like, AI growth is supply constrained. Hardware cannot keep up with demand, and data centers are not built overnight. So you have that. And Jensen talks about Michael Dell and NVIDIA and Dell all the time. Couple that with the issues going on at SMCI, which both Dell and HPE, I think, will be beneficiaries. And so I took the opportunity. I bought it last week at 130. I sold, though, the January 145 calls and got over $7 of call premium. So, Kevin, you would agree it's huge call premium. My guess is it runs up there before and I get called away, but that's what you do with covered calls. I think it's a good trade over the next 3 months.
Yeah, I mean, stock's been up, 80% just about year to date. So we'll continue to follow that one, obviously. Thank you. And shout out for all our friends down in Houston. All right, Kevin, you bought more of the CME. And you bought more of Amex. Tell us about those before I get to the others.
So every stock that I own doesn't go up 40% in a week. There were some stocks that in the post-Trump rally went in the opposite direction, and I think for the wrong reasons. The CME group was down most likely because of the fall off a cliff in volatility, thinking that the trading volume might be down. So we took that as an opportunity to add to it. Trading volume's up 18% year over year. We talked about this in the past as a dividend play, return cash to shareholders through share buybacks. And in December, the past 3 years, they've initiated a special dividend that's just been increasing. We think it could be as much as $6 plus this year. Now, that's not a guarantee, but we want to be in the name before it. We bought it on weakness.
You trimmed Texas Pacific land. Bryn's going to be very upset with you, but
Yeah.
neither here nor there.
We only own 873,000 acres in the Permian Basin. Texas is a big place.
Yeah.
Now, you looked at me.
She's very territorial.
You looked at me squirrely when we bought this. For all the right reasons. So we bought this a month ago in the growth strategy. It was up 100%.
I looked at you squirrely when you bought it?
You did. And why wouldn't you? So 100% profit. Here we go into this name. We bought it at $9.50. Right now it's like $1,300 and change. So it's a 40% profit in a couple weeks. So we trimmed 30% of it. Not to say that it can't go higher, but I mean, it's almost insane to think about how some of these moves have happened. And this is a royalty play on mineral rights, natural gas, oil, water. So we really like it from an infrastructure play and a data center play. But there are times to write covered calls, and sometimes there's a time to just take some profits.
Our geographical experts, by the way, are suggesting that it's actually Austin, not necessarily
He was born. We went to the same high school. He went to college at UT.
Oh, you're talking about where he's from. Okay.
That's what I said. I said he's from. I didn't say where he started Dell.
I got you.
He started Dell at Austin.
Okay.
I was in college.
I'm just telling you, they're coming out of the woodwork.
Fact checkers.
Now, we got fact checkers all over the place.
Big week for them.
Thank you very little for the email. You know who you are. But Bryn was very specific. And I hope they're laughing now. You sold covered calls in Apple, and you sold covered calls in Walmart.
Yeah, not to get too serious on a trading show, but we had made sure that there were no covered calls that were going to be in existence. So everything that we had expired on or before 11/1. We got burned a little bit in 2016. We remember these lessons. Same thing, same practice in 2020. No options heading into the election night. Things rallied. We were able to participate in all of that. And then on Wednesday, we sold calls on Walmart. We sold calls on Apple, just taking advantage of what was still high volatility, still tremendous strength. And this is a way to add some hedging to your portfolio, but also some great cash flow.
Okay. Thank you. Let's get the headlines now with Pippa Stevens. Hi, Pippa.
Hey, Scott. Special counsel Jack Smith is looking to pause the Trump criminal case to assess what he calls the unprecedented circumstance. The notice came as part of the prosecution's motion to vacate all pending deadlines in the election interference case. Smith says he will decide by December 2nd how to proceed. Israeli Prime Minister Benjamin Netanyahu has appointed a new ambassador to the United States. The U.S.-born Yahiel Leiter, who previously served as chief of staff in the finance ministry, will replace Ambassador Michael Herzog. Netanyahu said Leiter was a highly talented diplomat with a deep understanding of American culture and politics. And at least 4 wildfires are continuing to threaten parts of New Jersey, fueled by a dry and unseasonably warm conditions in the Northeast, which has put the region into drought. Though some rain is in the forecast over the weekend, which could help firefighters dampen the flames. Causes for the wildfires are still under investigation. Scott, back to you.
All right, Pippa, thank you. Pippa Stevens. Coming up, Josh Brown hitting the sell button on a key name in his portfolio. He is going to join us next and document that trade.
.com.
Point and a half away from S&P 6,000, as you just saw there. We'll monitor that. But Mike Santoli, it just speaks to the kind of week this has been. And our senior markets commentator, of course, is here for his midday word. The Dow's above 44K. Nobody better really to take stock of all this than you.
Well, try, Scott. It really is kind of path to least resistance type action. It's very hard to push back too forcefully against just the magnitude of the aggressive moves, the response to that volatility crush, and everything else that's happened this week. What I do find interesting is there's plenty of stocks that people are finding an opportunity to lighten up on. People are focusing bets, whether that is on the year-to-date leaders, which really carried the day yesterday and into today, or whether it was the one-day burst of rotation into cyclicals and financials and the like. So it's enough to carry us here. 6,000, I don't think in itself has a ton of significance, except that it's also 25% up year to date. It's also comes at a point when the S&P is looking a little bit overbought. That's not necessarily a real indictment. That's more of a reflection of strength. But you should set expectations accordingly to how fast it can pile up gains from this moment on in the short term.
People are talking on that note today, Mike, that you have a risk on, clearing event that could last from Election Day at least to Inauguration Day on the 20th of January.
Well, I definitely think that is the tailwind, and there's no doubt that that remains in place. Something would have to come along to disturb that. But that doesn't mean you go up every day. It doesn't mean you don't have pullbacks. And if you look at things like the path from Election Day through an inauguration, at some point in there, usually you have some give back. Maybe it's January's business. But even at that, we're already up a few percent, from right before the election. So, you have to just, I always feel as if you don't get hurt setting expectations low if you remain involved.
Of course.
That's where we are.
All right. We'll see you on closing bell. We got within a point of 6,000 on the S&P. Josh Brown is going to join us next with his trade update. And I do know that while we're in break, we will probably cross 6,000 just because that's the way things go in TV. We're back after this.
Are you following the Halftime Report podcast? What are you waiting for? Look for us in your favorite podcasting app. Follow the Halftime Podcast now. Athletics.com.
All right, welcome back. The TV gods were looking out for us today. We did not cross 6,000 during the commercial break. Well, we'll keep watch as we welcome in Josh Brown. So give me your thoughts on this week before I get to these moves, because it's been quite extraordinary on many levels and many different things, Josh.
Yeah, I think it's such a great affirmation for investors everywhere that risk is rewarded over long stretches of time. And I was just looking, my first appearance on CNBC, talking markets with the viewers, the S&P 500 is at 1,200 or 1,250 or something. So it's up 400% in the last almost 15 years. And, you know, not every day and not every month. And there were periods of time during that stretch where we had taken huge steps back, multiple times. But, you know, the overarching message has always been, you won't be rewarded every day for the risks that you take, but if you take intelligent risks, things are ultimately going to work out. And I think that affirmation right now, whether we hit 6,000 today, Monday, Tuesday, is not the most important thing. The most important thing is that people are listening and they are taking care of themselves and their portfolios accordingly.
All right. So we'll watch that as we talk to you about these moves. So you sold Sweet Green. That's number one. Just tell me about that move and why you did that.
Yeah, Sweet Green went up a bunch after I bought it, and it's a recent position of mine, and I bought it on technicals. They reported last night the stock was, I don't know, off like 5–10%. I thought it was a good report. The guidance, they gave a range where maybe it was a little bit of a disappointment, and I saw a couple of firms either just reiterated or one firm lowered its targets this morning. So I don't feel terrible that I walked away from the trade. It may set back up. I may want to get back into it. It's still on my screen.
It was Goldman downgrading today to neutral. They had it at a buy. They maintain their $40 price target. As we know, it's where the stock is now. You know
what, Judge, one thing with me is that I have a lot of exposure to the space already because of the stock we're about to talk about. But I'm also in, you know, Shake Shack, and at a certain point, like, you have to pick your favorites.
Okay, so Sweet Green is toast, so to speak, but toast is not. I guess I'll say it that way, because those shares are surging today. New 52-week high, highest level since December of 21.
Yeah, look, this business added, this company added 7,000 net new locations over the last 90 days. And they are now 127,000 restaurants utilizing Toast products. And the beauty of what this company does is they get themselves in the door via the payment gateway. Anyone who's ever, you know, bought a muffin in an airport understands, you know, the screen, and you hold your phone up to it. But once they're in the door with restaurants and restaurant chains, that opens up the potential of all of these other solutions they sell. And what they found is that when companies, for example, use their white-labeled ordering solution, so like being able to go on an app and order something from your favorite restaurant because Toast is providing that technology, the loyalty of that customer goes up and the frequency of ordering. And that is the growth business. Annual recurring revenue, which I think is the most important part of this story, hit $1.6 billion as of the last quarter. Judge, that's up 28% year over year. There aren't that many companies in the payment space that have been able to grow at this pace, and now they're doing so profitably. So I feel that my early interest in the stock is now being vindicated by the actual results, and I'm going to stick with it.
All right. Just for clarity's sake, too, I'm just saying that Sweet Green is toast in Josh's portfolio. You never know. You never know what people think you're saying.
Oh, Sweet Green will be fine, but again, I can't hold everything. I took a small profit there, but this one I'm going to stick with.
Wasn't making a broader comment, obviously. Thank you, Josh. Good weekend.
Good
See you on the other side.
All right.
Josh Brown.
Take it easy.
The setup is next. We are back, and we have the setup for you. Next week's earnings. Cisco Systems, Wednesday after the bell. Brian Belsky, that stock hit a 52-week high yesterday. What do you think?
You know, people forget that Cisco actually is a great barbell opportunity with some of the more expensive names in tech. And we own it in value and dividend growth. And the stock's been increasing dividends for 10 years. It's a great name.
Disney is Thursday before the bell. What do we think about Disney here?
Yeah, one of the 4 streamers that are actually making money. We would probably rank it 4th. We still think that Bob Iger's doing a good job in terms of taking out capacity there.
Shopify is Tuesday. You own that too.
Yeah, we own it in Canadian dollars in Canada, and we own it in U.S. dollars in America. But you think about really the bellwether of our economy. We talked a lot about on the show today. Small, mid-cap companies, both private and public. And Shopify is the portal for small, mid-cap.
U.S. dollars. Dollar strong this week.
Yes.
What do you think about discretionary stocks in general, which have had a good week, carried obviously in part by Tesla and Amazon, but is there renewal for these kinds of stocks too?
Yeah, I mean, we didn't have, I know we were going to talk earlier about Home Depot and Lulu and some of these names in the restaurant space and the recovery and the reorg of Starbucks. There are great stock picking ideas in consumer discretion. We think earnings in financial companies are understated. We think consumer discretionary companies, especially, are way understated. And you want to look at the consumer discretionary sector, take out Tesla and Amazon, and then look at those great companies in terms of how they're earning.
Okay. We'll take a break. We'll come back. We'll talk about a stock. I mean, I know everything's been talking about everything that's up. We'll talk about a stock that's been on a 6-week losing streak. One of our committee members owns it. We'll kick it around next.
Off at callarsandco.com.
All right, welcome back. The stock I was alluding to was BHP. It's about to have a 6-week losing streak. It's down again today by 5%. Bryn Talkington owns that, the BHP group. What's going on here?
China, China, China. I think we're probably going to use this as a tax loss this year. It's just been brutal. Like, it's down 19% on a price, 15% if you say the 5% dividend it'll have. They're based in Australia, one of the largest miners of iron, copper, and coal. But it's China, and so until China actually, the market believes that these stimulus plans are actually going to move through the economy writ large, I think these will continue to be under pressure, like all of the other China derivative trades today.
I mean, energy's been so interesting that it's the best performing group under President Biden, the worst performing group under President Trump. It just seems so counterintuitive to how we would think about these stocks.
It does. Well, I think this is discrete because obviously it's in the commodity space of iron, and you think about China building buildings. That's where they really need. They need BHP, and just they're overbuilt there. And so that to me is like a different structural headwind. But I think within the energy space, I don't think it's going to be a drill, baby, drill. If you listen to Diamondback and the other companies, these companies have still been fiscally disciplined. And I think you're going to keep with the best in breed companies in the energy space, that fiscal discipline. They know investors need that if they're going to want investors to stick around.
Yeah, materials have had a decent week, up 1.5%, and they've certainly had they've underperformed this year, up 10%, but just about everything is green. All right, we'll take a quick break. We'll do finals next. Well, we did it. Moments ago, the S&P 500 hitting 6,000 for the very first time ever. We're a little below there, but trust me, we did. We first hit 5,000 9 months to the day ago, February 8th of 2024. This year, we hit 5,000. It's only taken 9 months to go 1,000 S&P points. That's the kind of year it's been. Pretty remarkable. Brian Belsky as we watch this market. We'll track it for the rest of the day. Let's do final trades. Yeah?
Yeah,
You good?
it's amazing.
Okay.
It's amazing.
All right, I was wondering what the chuckle was for, but why don't you give me a final trade since you're so giddy?
Well, thank you so much, and thanks for having us, by the way.
Yeah, let's go ahead.
Glacier Bank Corp, GBCI, a little bank in Montana, amazing bank.
All right, good stuff. Bryn?
I bet Bitcoin ETF, I think having passed us, I think there's lots of institutional ownership and sentiment into the
Shan?
year.
Financials, I think we articulated that case pretty well today.
Kevin Simpson.
CME Group, they're printing money, and we think there's going to be a special dividend of over $6.
All right, that does it for us. The exchange is right now.
Thank you very much, Scott, and welcome to The Exchange. I'm Kelly Evans. Here's what's ahead as we close out this crazy week. And what a week it's been. The Dow hitting 44,000. This is the best week in a year after Trump's election win. The S&P hitting 6,000 moments ago, and the NASDAQ yesterday closing above 19,000 for the first time. The small caps, of course, are up 10%. Our next guest says momentum rules. We'll ask him for how much longer and how to ride it. Plus, that brings us to this chart. The key catalyst our international strategist is watching as a signal to trade out of the U.S. And he expects that to happen under Trump. He'll tell us what it is, when he thinks it will happen, and where in the world he'll be buying. And a special 3 buys into bail election edition, including one name in energy that hasn't been mentioned as a Trump winner this week. You're looking at it, the name and why our trader likes it ahead. 2 mystery charts, 2 opportunities to send me those guesses at Kelly CNBC. Let's start with today's markets, though, and Mike Santoli is here to round up this incredible week, Mike.
Yes, Kelly, round up the round numbers, right? We have the 44,000, 6,000 on the S&P. It's kind of fun when we hit those landmarks around the same time. Of course, as the indexes get higher, it becomes more likely. Here's a 2-year of the S&P 500. Obviously, what we've seen in the past week is a stark acceleration of an entrenched trend. That vertical move on the end of the chart is going to be visible on this thing for a long time to come. That being said, I keep pointing out we're pretty much at the upper end of the trend path that we've been in here. Overbought means strong. Momentum is very much ingrained, but you have to, leave yourself unsurprised if we back off a little bit here and take a breather. Of course, we got that huge one-day burst higher in small caps. Here's the Russell 2000 almost catching up after a massive deficit versus the NASDAQ 100. So this is small cap, cyclical against kind of mega cap, growth stock driven. This was like a 20-point spread back in July. It had been kind of getting off the mat for a while after we got clearance. The Fed was going to be cutting into a pretty resilient economy. And then, of course, you have the Trump policy mix coming in as well. What happened? The volatility? Well, it's basically just deflated. All of the tension has been released out of this market. What's interesting here is down to around the longer-term average in a bull market of 14, 15. All this gain into the mid to low 20s was essentially happening as the S&P 500 was hitting record highs. That's unusual. It shows you it was very short-term concentrated risk, I think particularly against an unclear election result, and that obviously did not happen. We've also seen gold back off very sharply, which kind of showed its hand as to why it was up there, Kelly.
Mike, what do you make? I'm going to talk with our lovely panel about this. Mark Hebner turned me on to this, Mike. But what do you make of the total return idea here and not just the price return or the Dow and the S&P? I mean, it makes sense, right? Investors capture the total return, and the Dow on a total return is at 109,000.
Oh, sure. I mean, it always, if you're talking about the investor's experience and what's relevant and how you're going to decide whether to rebalance in and out of various asset classes, yeah, the total return is obviously what matters. In fact, I was just looking at, I was going to have this chart later, that the 60-40 portfolio, the total return got to a record high again after the bear market in stocks and bonds in 2022. Earlier this year, we've just now gotten to the price return record of that 60-40 portfolio.
I'm looking at, so Dow total return is up 30% this year. So as good as it's been, it doesn't even really capture how good it's really been, which is just
No, that's absolutely right. Now, here's the question, though, because you have very low initial dividend yields in the indexes if you're buying at today's prices. So that's going to be a little bit of a tougher road. Of course, dividend growth strategies, I know some people have been making the case. That's why it makes sense right now to kind of help cushion that return.
All right, Michael, as always, thanks. Mike Santoli at the New York Stock Exchange. And my next guest says what we're seeing in markets is a reminder that momentum rules. The question is for how long and what could derail it. Let's bring in Steve Sosnick. He's the chief strategist at Interactive Brokers. Bet you didn't see that one coming. Total return versus price return?
I've been harping the dividend trade for months. I've been saying get involved in dividends because that helps your return. That's a big part of it. Again, as Mike noted, the dividend yields are lower because the prices are higher.
But I think the point is that, like, let's say you're in the S&P 500 and you're looking at just, and this is important for people who have active managers, because the active manager says, I'm outperforming on a price return basis. But you got to have the total return to see if they really are. So in other words, without even trying to adopt a dividend strategy, a lot of investors are doing much better than the index actually says this year on a price level basis alone.
Absolutely. Also remember, a lot of investors, a lot of the hottest stocks have been your best performing stocks. So I mean, you know, somebody who just basically put it all in NVIDIA at the start of the year is outperforming everybody. So it really depends so much on your stock selection and your balance, and I think that's kind of why you know, you can't always outguess these things. Yes, with 20/20 hindsight, I wish I'd put it all in NVIDIA myself, but I didn't.
Well, and the point is, we're always going to feel that way. There's always going to be something where you kick yourself and say, well, if only I was in that. So indexing in the long run, I saw a tweet the other day that made me laugh, and the guy said, why have I been wasting my time on UK small cap stock picking when I could have just, you know, been in the S&P since 2000 and basically done nothing and done great?
FOMO is a very powerful motivator, and that's one of the things we're seeing now is nobody wants to miss this rally. That's why we see dip buying, you know, at even the slightest dip now, the dip buyers come out, and we also see rally chasing. That's where the momentum is coming from. I'm not going to say it's all FOMO, but nobody wants to miss it. And quite frankly, if something's working for people, they're going to keep doing it, and it's been working. The question is, at some point, this inevitably stops working. When and what might be the signals to when it does stop?
I noticed Dennis Gartman, for instance, said, yeah, I'm not shorting this market anymore. You just can't. So let's spin this forward now. Forget about hindsight. Forget about 2020. I mean, what are the takeaways, the positioning strategies for what the next few months kind of into 2025 could bring?
I think it's hard to short this tape, but it's not necessarily wrong to start to take profits. Again, I think, you know, we probably don't see profit taking till the beginning of till the next calendar year, because number one, that's just normal tax strategy. Number two, I think people might be hopeful for some sort of improvement on capital gains rates. So you're not going to see a lot of that, which is probably one of the things that keeps the path of the momentum trade in place. I think what could unravel it is some sort of concern out of the rest of the world about what we're doing, or the bond market freaking out a little bit. It freaked out a little on Wednesday, then recovered since then.
Dan Clifton was on our air earlier this week making the case for it not freaking out from here. He mentioned the Treasury General account, maybe you get some stimulus from that when you hit the debt ceiling in the first quarter, but also that the deficit could end up coming in by $300 billion or so, regardless of who takes office next year. The CBO doesn't have that in its baseline. You know, are there factors that maybe make people think the TLT trade, for instance, or shorting it or whatever, is no longer such an obvious thing?
It's really hard to say because we don't know. Because remember, the tariff policy is one of the things that could spook the bond market in a big way, and tariffs don't need to be going through Congress.
I don't follow that, though. I don't follow why, if you increase the cost of one thing, inflation in the entire economy goes up. If the price of shoes from China doubles, then people who don't have more money are just going to take that spending from somewhere else, right? On net, that doesn't add, you know, that doesn't increase the money supply.
It doesn't, but what happens is if the cost of shoes go up and you need the shoes and you have kids who need shoes, you're going to have to buy them. And what happens is the cost is going to go up, and that's money that you can't spend elsewhere. So it does have a negative effect either on economic growth, you know, consumer spending, or it has an effect just because the prices get raised, right? You know, I think about like the washing machine tariffs. When trying to buy a washing machine when those were going in place, the domestic production hadn't caught up yet. But Whirlpool and the domestic machines were able to raise their prices.
Right.
So in the short, so it's.
But I think that's why when you go back to the first Trump administration, by year 3 they were cutting rates, right? If we all say, well, what happened the last time when they slapped tariffs on the economy? We didn't see inflation, right? We didn't see an inflationary economy. We didn't see a Fed having to hike rates in response to that. We didn't see long end yields really going up.
I think also though that, you know, one of the keys here is the globalization in terms of the tariffs then were tended to be a bit more targeted and a bit smaller than what we're hearing about now. That's what I'm saying. I don't, this is the problem is why momentum is sort of working, because there isn't necessarily anything to upset this. What we're talking about is all speculative. You know, you could get some sort of freak out from foreigners not wanting to buy our debt, you know, et cetera, et cetera. But what we're talking about is all hypotheticals, and that's kind of why people in trading mode are just sort of sticking to the here and now.
Absolutely. And the last question I'd ask is kind of the party pooper question of, is it too good? Is it, you know, 1999 and, you know, Greenspan's cutting rates because of LTCM, but we have liquidity taking off and stocks off to the races. And, you know, with NVIDIA now the biggest market cap stock at $3.6 trillion, and now it's in the Dow. I mean, is there an idea with the Fed cutting rates as well this week that this is too much liquidity, actually?
I've been on the sideline. I've been on the side of like, why are we doing this? Because there isn't, you know, corporate bond spreads are they're very tight. Nobody's complaining about borrowing money. There's all kinds of speculative investments. And the spooky thing is, Intel went into the Dow in October of 1999.
Oh, interesting.
Only to be replaced by NVIDIA now. That's just a freaky
nice
coincidence, but yeah, history doesn't always repeat, but sometimes it rhymes.
So you're staying in the market, you're staying long, kind of generally speaking, and nothing too tactical until we get more clarity on what's going to happen next year?
Yeah, you can't. This is a tape that's really hard to fight, even if it's expensive.
Steve, thank you so much.
My pleasure.
Steve Sosnick. Speaking of China, the country is shelling out nearly $1.5 trillion to tackle its local government debt problems. Eunice Yoon is live in Beijing with those details tonight. Hi, Eunice.
Hey, Kelly. Well, that $1.4 trillion is supposed to be stimulus, but it's not stimulus in the traditional sense in that it's not being used to stimulate demand. So 60% of it has been allocated to a program for local governments to issue new bonds over 3 years, including this year, to pay off what the government calls as hidden debt. So this is debt that's off balance sheet or unrecognized, which has been a primary source of risk in this economy. So in addition to that, local governments will be allowed to issue more special bonds over 5 years to raise funds for the same purpose. The stimulus is indirect. So the finance minister said that $85 billion over 5 years would be freed up because of this refinancing of the debt that local governments would be able to spend. The finance minister also added that new measures would promote state purchases to buy idle land and unsold homes, so that in theory would help the property sector. But there's nothing in this plan that directly helps and gets money into the hands of consumers and companies to stimulate demand.
Eunice, the question of tariffs that we were just discussing, over here people are worried about inflation or what that could do to consumer spending power. But how do we expect that to factor into future kind of stimulus policy that could be coming out of China?
Well, you know, in the run-up to this announcement, there was a huge expectation that the stimulus plan was going to be bigger under a Trump win, just to offset exactly what you said, the potential of, say, 60% tariffs that the President-elect Trump would impose. That didn't happen. And so the thinking now is that the government is maybe trying to keep some of its powder dry and wait to see what happens next. In fact, the finance minister also has said that the policymakers were open to the idea of a larger fiscal deficit next year. So that suggests that we might see more stimulus next year.
All right, Eunice, for now, thanks again with a lot of Chinese enthusiasm, I should say stock enthusiasm for Chinese stocks. Eunice Yoon in Beijing tonight. My next guest says investing overseas, including in China, will depend on the direction of the U.S. dollar, which he expects to fall during the new Trump administration. Joining us is Marco Papich. He's chief strategist at BCA Research. Walk us through this, Marco, and welcome.
Thank you for having me. I think if you think about the last 4 years and the pillars of American outperformance, certainly it had to do with innovation, technology, AI, the good stuff. But there were also two other reasons that the U.S. economy has outperformed. One was unchecked migration, and the other one was, of course, fiscal policy. And I think that no matter who won this election, but in particular with President Trump, both of those are slated to end, or at least have, a negative second derivative. In case of migration, I don't think we have to spend any time on that. That's clearly going to be checked. And then when it comes to fiscal policy, I think that the bond market reaction ahead of the election and potentially after is going to be a significant constraint on further fiscal profligacy. So that takes away the two reasons why U.S. outperformed the rest of the world by such a wide margin over the last 4 years, which will allow growth differentials, particularly if this fiscal stimulus in China does continue to add to growth in China. The growth differentials will start favoring some non-USD currencies.
What did the dollar do during his first term? And again, I'm not going to belabor the comparison then versus now, pre-pandemic, perhaps very different from post-pandemic U.S. economy. But what did the dollar do the first time around? Maybe we can show that chart as well.
No, I think your question is extremely cogent, whether it's pre or post-pandemic, and particularly because of the conversation you had on tariffs and questioning how much do tariffs actually matter. I have a very heretical view. I don't think that Trump will actually wage that much of a significant trade war with China. It's not something he campaigned on, in fact, and most of the numbers that are being thrown around by the media and us in finance are really based on just speculation. In fact, for the past 6 months, he's been talking about raising tariffs on particular companies to bring them to the U.S. That's a much different thing from broad tariffs against China. So what the dollar did is it actually went down significantly in 2017 when the U.S. was fiscally stimulating, which is likely going to continue to some extent, but not as much as the last 4 years. And then when the trade war started, everyone saw this huge upswing in the dollar in 2018. And I think a lot of investors have, in a knee-jerk way, bid up the price of the dollar, expecting that tariffs will help the dollar. Number one, I don't think tariffs actually help currencies as much as people think. Number two, I don't think that there will be that significant of a tariff attack in China this time around.
And we just showed that longer-term chart where you do see kind of that upward move in the dollar. So you think it could be different this time around. You also think that maybe we're going to target companies more so than countries. Is that right?
Yeah, so I mean, it's not that I think this, it's that President Trump has been literally saying this. It's just that nobody wants to actually listen to what he's saying. So there's constant this push and pull where he says, I'm going to force BYD, I'm going to force John Deere. Again, indiscriminate, whether it's American, Japanese, or Chinese company, I'm going to force them to move their production to the US. And everybody keeps asking him, but what about 60% tariffs against China? He hasn't really talked about 60% tariffs on China for the past 6 months. It's all been about moving production to the U.S. This is a significant shift in what the focus of the trade war would be.
The part of this, Marco, that I think people are going to resist is the idea of fading U.S. stocks and turning to buy international ones. And you know, there have been a lot of times going back to, you know, the past 20, 25 years when it's been really important to do that to make sure that you avoid drawdowns. But U.S. continues to increase its share of global market cap. You know, Europe's a mess. I mean, you look around, there's not a lot of places where you feel like you're going to get a better return on investment these days.
I think currencies are very, very important motivators for that shift. So if you're denominated in US dollars, you're not really going to care necessarily. But if you're denominated in other currencies, you do really care what the dollar is doing. That's number one. Number two, central banks in emerging markets can basically get a pretty virtuous cycle if the dollar declines, because they'll be allowed to cut rates domestically as their currencies appreciate and their inflation abates. And then finally, I think the most important thing is that a lot of the other assets are priced for imperfection. You know, everybody thinks Europe is a mess. Everybody thinks that China is going to fumble on the fiscal stimulus. And so all they need to do is to prove that they're not suicidal. You know, the policymakers are going to put a bottom in growth, that there's a modicum of growth prospects. And given the valuation difference relative to the US, these markets are going to do fine. Whereas, as your previous guest actually pointed out, US is very expensive. It's priced for perfection. In other words, everything has to line up just right. And if you're a long-term investor on a 2 or a 5-year time horizon, I think these things really do matter.
Yeah, I mean, I take your point about kind of shifts that we could have, and I could imagine, you know, big traders being able to kind of really catch these inflection points. But 12 years ago, when the per capita GDP difference, even between the U.S. and Canada, the differentials that have widened between us and other developed economies are only growing over the years. So it just seems really hard to feel confident about putting capital.
But why? Is it because we're better innovating in technology? Or is it because we had unchecked migration for the past 4 years, which is growth positive, and massive, massive fiscal stimulus we're going to have to pay for? And that's the really key point, which you just said. GDP per capita has shot through the roof in the United States. But I think that the pillars of that outperformance are actually policy decisions made over the last 4 and 6 years. And I think that gravy train is ending. And it would have ended even if Harris had won the presidency. She would have been checked by Republicans in Congress, who would have put the foot down on fiscal policy. With President Trump, it's going to be a little bit more of a bond market. And by the way, his advisors are Wall Street veterans like Scott Bessent. They're thinking about this too. If bond yields go higher, they're going to have to modify that fiscal thrust. And so on that trajectory, when you think about it that way, the pillars of American outperformance are not necessarily that America is somehow inherently better. It's that just actually we've been more profligate and that we've,
listen, that is in part true. But if migration were a big part of this, then Germany would be doing great right now. Why would Canada be like? I just don't see, if you put migration to the side, and it helps on the margin, I guess with GDP, but that wouldn't explain why our.
What's up, guys? Justin here. If you don't know, I'm running a workshop. No, I'm just kidding. No, but I am not kidding. I am running a workshop. I was just coming on here because I may end up. Okay, Google just broke. Google just broke this level.
Other places.
Give me 1 second. Hold on.
Panned out, the trend of U.S. outperformance goes way back more than just the past 4 years. I mean, we're talking literally 15 or 20 years now that this has been building.
But then again, in the early 2000s, that didn't happen. And so I think that we have to ask ourselves, what kind of a world are we going to live in? And I think that there are some big shifts going on that do benefit places like more capex-driven economies. So de-risking from China is a very, very, difficult and painful and expensive endeavor that's going to help industrials, materials, and other sectors such as that. Similarly, de-risking from climate change is also a very capex-driven effort. And so when you think about that, if that continues for the next 4 years, I mean, that actually benefits sectors in the US that would participate in that, but indices in Europe and Japan tend to be more overweight to those kind of capex endeavors. So there's more than just fiscal policy and the dollar. It's also what kind of a world do you think we live in? For the past 12 years, for much of that, not last 2 years, but for much of that, low growth, disinflationary world benefited tech, which US is very good at.
Yeah. No, and I mean, although there's not a lot of other sectors that you can look and say, okay, and maybe we're harping on Europe too much because Japan is super interesting. There's a lot of things there that do look like they could outperform, so we shouldn't lump it all together.
I actually think Europe, I'm sorry to interrupt you, but I think actually Europe is way too hated. Europe is about to be drowned in cheap energy because LNG producers have made a huge mistake. There's massive amount of LNG supply coming online. And so the valuations in Europe are suppressed, I believe, for 2 reasons. The war in Ukraine, which Trump is supposedly going to end, and then the fact that there's this perception that Europe cannot get over its energy problems, which is a mistake.
Where is the LNG coming from? Because I've seen the chart. I mean, the cost of energy in Europe is structurally, and UK is much higher than it is in the US, but we have the LNG. Where are they going to get it from? Us?
It's not the US. No, not at all. It's Qatar, which is bringing online 50 BCM of LNG, way too much for the current demand globally. Canada's bringing about 18, 20. You've got Russia, which has started to participate in the LNG supply game because obviously a lot of their gas is anchored in the Yamal Peninsula, can't get out. Mozambique, there's a lot. And Australia already brought online massive over the last 5, 10 years. So we've overbuilt supply. There's not enough demand. Japan's restarted its nuclear power plants. Its demand is coming down. And so Europe will be awash with cheap energy over the next 2 years.
That would be a very bullish story for sure. Marco, thanks, as always. We really appreciate it. Marco Papich with BCA Research. And still to come, let's get more controversial. The private prison stocks are soaring this week as the election outcome lifts the so-called Trump trade. The president-elect telling NBC there is no price tag on his mass deportation plan. I'll tell you why these 2 names could be some of the biggest beneficiaries, and look at one area of clean energy that's bucking this week's downward trend. Plus, restaurants underperforming the market this year, but one analyst says hope is on the horizon for 2025. We'll look at the biggest emerging trends and how to play them. The Exchange is back after this.
This is The Exchange on CNBC.
All right, so what I was getting at, guys, is just thinking about what it is that I'm going to do. I was thinking about getting off here and getting a couple things done. What I was going to say is, if and when I make a trade, make sure you guys are following me on Twitter at Ivy League Trades. All right, same whatchamacallit, same logo or whatever you want to call it right here. All right, I'm actually going to delete this. Oh my gosh. Oh my gosh. Just a little tired. I got to bed a little later than I wanted to last night. But I'm not going to be done trading today. If you guys want me to leave my charts up, I'd be more than happy to do that. If you guys want to watch CNBC and have charts or whatever. There's a couple of things that I'm seeing here on the SPY. It's actually pretty damn crazy that this thing is not in overbought territory yet. Nice MACD cross.
Shares of Ottertail.
If we close this week at the top end of the weekly candle, I think it sets the stage. All right. Now the thing is we have a couple gaps I want you guys to keep your eyes on. Or that if I were to suggest anything to anybody,
Athletics.com.
Keep an eye on.
Welcome back to the exchange. From prisons to nuclear, we're tracking Wall Street's biggest winners.
It doesn't mean it has to get filled soon either. We still have gaps that have never been filled on the SPY. You have a nice little gap right in here at 510. Just making way for a break above 60 and a possible pullback. I'm not sure what it's going to be, but at least the SPY in that 80.
More than 2%.
You go up 10, 20, $30, and then you get your little pullback or whatever, and we don't really have a reason right now. We're rates are being pulled back. We know the president. There's no banking issues that we see of.
Possible DOJ investigation.
I don't know. No more escalation. I don't know what.
That's Oscar Tango.
So maybe that's the exact recipe for disaster. Anyway, okay. I guess I lost people. So I'm thinking about getting out of here. If you guys want to follow me on Twitter, at Ivy League Trades. I love you guys. I guess a bunch of people just left, so I will also leave too. All right. Unfortunately. Or fortunately, we made some money today.
Hosted events.
Damn it. So I'm going to leave you guys with this. All right, I'm going to leave you guys with this. If you have not signed up or if you have not donated for someone else to be able to take part, I'm doing a workshop. It's only going to be about 20 people. All right, sign up. It's all going to be online where we can all do it together. You don't have to go nowhere or anything. I guess I should make that a point. And you guys will have work that'll be, that you guys will be able to take with you. I've already calculated this stuff at a few $100. And I want to do this because I want to see if I can help you guys really, truly change your trading habits. But help you get that number that you have and make it a lot bigger. Consistently. And really help you, do what it takes to really see how powerful these markets are. Because I don't think too many of you guys have experienced that. You put on a trade, okay, cool. But, I want you guys to be making a come up. Oh, man, I just put myself in a different tax bracket. Oh, shit. Really doing, feeling good about yourself from where you are to where it is that you want to be. And just unlocking the true power of the market. I don't think a lot of people have done it. Nobody talks about it. So to me, I don't think people are getting there because I know what it's like. And you can't not talk about that. You can't. Once you've really realized the and harness the power in these capital markets, it's literally the greatest equalizer. There's a reason people in the market, Wall Street says that, because it is. So, with that said, I love you guys. I hope you guys have a great weekend. I'm going to start working on a video for this weekend right now. Follow me at Ivy League Trades for any trades that I do take. Sorry, hold on.
Regulation as well as faster permitting, especially for energy projects. Takes to get one of these nuclear reactors off the ground. That could certainly be an upside. Now, we have seen a big response in some nuclear stocks this week, including from small modular reactor makers Oklo and NuScale. And you can see actually
I do apologize.
Larger than assets in all.
Response rate of 46%, overall response rate for 12 months of 91.
I hope you guys have a good rest of your weekend. I still have a couple more phone calls to make. I have a couple things to do. And then I'm working on a video this afternoon here. Please, if you guys want to give back to the stream, if you've learned anything and you want to just show a token of the appreciation for coming on here for free again, I am not here to just take people for all the money that they have or don't have. I'm not here to steal your data. I talk about this a lot. A lot of people in the capital markets are here using the market as a blinder. Here, let me teach you how to trade while I take your data. They're data brokers, all right? They want to know what you like to use, how long you like to use it, where you use it, how long have you been using it, anything and everything. That's the part that nobody talks about, and then they're the same people that will tell you we aren't the industry, but yet they are the industry. So, with that said, I'm out of here, y'all. All right, but I'm not. So follow me at Ivy League Trades. We still have a few spots left open. I expect to see 1 to 2 to 3 to 4 to 5. I expect to see some of you guys sign up for this workshop. I'm telling you, and I am giving you this promise that if you are not happy with what takes place, or if you are okay on attending and would not like to, but you would like to give back and buy someone else a ticket, that is fine as well. The link is in the description. And I will see you guys there. Second, that's all I got. Hit the like button, subscribe. Again, Ivy League Trades on X, formerly known as Twitter, for my trades. I'm going to let you guys know what I take, when I take it, what I'm thinking, all that fun stuff. Just follow me over there. I love you guys. Have a great rest of your afternoon.